Testing. Okay. Okay. Stop. Yeah, so for semiconductors, it's not my strength in here, but we had a long discussion, I guess you could say last week, sort of, but it was really online. It followed through online, and I might as well bring up the charts from online. Because this is, because I know Bernard's not in this chat, but this is actually the chat room that we have. Just, I don't know, people want to keep in touch. So I actually follow up because last week, there was a lot of discussion about 5G and stuff like that. We actually followed up pretty hard on the semiconductor conversations. And I sent them this chart that I didn't have on hand last week. But let me see if I can find the chart real quick. Let's see. So I'll give you my thoughts on semiconductors, right? So basically there's like B2B semiconductors and then B2C semiconductors, if you think about it, right? So B2C would be like, let's say my car keys has a piece of semiconductor in here, right? This is consumer semiconductor. So more like infrastructure semiconductor, right? But then there's also like emerging semiconductor demands, such as like data center and stuff like that. So these guys in here, there's a lot of applied materials, NVIDIA, type of people that come in. Engineers from around the Silicon Valley, they come in and they share their feedback, right? So the way I analyze it is, if this is the chart right here, maybe I should pull up a better one, but this is the one I want to show you. So let me pull up a better one, worldwide I think it was semiconductor.com, worldwide semiconductor sales. So this to me is an absolutely very interesting chart. And we're just kind of chatting, we're not getting started yet. But this is the chart right here that I showed people last time. And I guess there was a lot of debate last week, and I couldn't, it's not my strength, right? Because I'm more of a software guy. But software and hardware have a very interesting relationship that I like to redraw. And it looks something like this, right? So let's say for hardware, let's say there's cycles like this, right? So this is hardware. But if you understand hardware and software, to me, they go together, and they're like this. And the reason they're like this is because, so the blue is software, right? Every time the software is too advanced, the hardware needs to catch up. Every time the hardware is too advanced, the software needs to catch up. And together they uptrend. Isn't that kind of cool? That's the way I think about it. I know you guys are like techie people in here, but correct me if I'm wrong. Well, we'll wait for more of the techie people to come in. But anyway, so this is the worldwide semiconductor revenue. And to me, this chart is extremely important because if you look at the blue line, that's the total revenue, global semiconductor sales, right? So we're talking about both B2C and B2B semiconductor. So consumer semiconductors as well as database semiconductors. When we say consumer semiconductors, we're also talking about people purchasing cars. Because there are semiconductors in cars, right? Or whatever other small purchases, like a laptop, a mobile phone, they all have semiconductors. That is included in the revenue. Also, the B2B, which is like data centers and other sophisticated, like military airplanes, they all have semiconductors, right? So this chart, the blue line consolidates both of them, and it just shows you the global demand. So it's kind of assuming a lot of things, just want to disclose that. But the red is just a year-over-year change in growth. So if you could just ignore the red, if you look at 2001, we had a decline like that in revenue, right? And 2008, 2009, a decline like that. And so we recently had a decline like that. We're currently having that in semiconductors, right? So I'm not a super duper semiconductor expert, but I'm more of an economic background type of guy. And when I analyze a chart like this, it's telling me, like, the guys debated in here, they said 5G is coming. But that's an emerging semiconductor need or demand, right? You're forgetting there's inventory from the previous semiconductor that needs to be offloaded. So this is telling me if this is going down, then are consumers not buying, mobile devices, laptops, and all that? Are military not spending on more, aircrafts? Because it's semiconductors, right? So that's my concern. But they're thinking 5G, that's the emerging semiconductor demand, which, I think the old inventory needs to be consumed first before they consume the next batch of inventory. So that's sort of my take on the global macro of semiconductors real quick. Hey guys, welcome. Nice to meet you. I'm the enterprise guy. Yeah, I'm really going by that name now. It's like my other name doesn't exist anymore. Reason being is enterprise guy kind of focuses on big business. If I said I was like the SMB guy, then I'd be focusing on the smaller business. So big business means you're targeting like executives, the discussion in here that we talk about board level conversations, right? So we talk about stocks at the highest level. So it's really cool stuff, and we analyze like who owns what. We even go on LinkedIn and start adding executives from, let's say, Coupa Software, which is something we're going to analyze today. But what are your two names?
My name is Sushant.
Prashant? Oh, you texted?
Sushant.
Sushant? Nice to meet you.
Nice to meet you.
And it's Shrikant.
Shrikant? Nice to meet you guys. Yeah, so welcome to the investment club. It's still kind of early. I usually let more people come in, so it's just kind of ask me any question. And I was just talking about semiconductors because Dave, right? Dave's new. He wanted to know about the semiconductor space, so I kind of started from the top down analysis. So this is the global macro view of it. So this chart was posted pretty recently. I think it was like a month ago. So that's my take on semiconductors. Anyone have any comments on that? Because the semiconductor guys aren't here yet. But that's my concern right there, that we're not consuming these mobile devices or TVs and stuff like that.
What do you think those are tradable effect in short term?
Yeah, I mean short term, but I'm looking more long term, right? Long term is kind of like maybe the market's seeing an overbuild of semiconductors. So look, I'm not a semiconductor expert, but I'm leveraging the economics and the chart to tell me like what is the economic demand of like the economy. This is just me getting more insight into how our economy looks like. And so that's where, I mean, it's tough, right? And then I combine that with like the S&P 500. So this is the S&P 500 and how I'm currently analyzing it. But we'll talk about it a bit. Man, you missed it. we were just talking about semiconductors.
Okay.
So I'm not a super expert, but Lalit would probably know more on semiconductors. I was just going over how, if you analyze semiconductors, you could divide it into like two segments of like B2C semiconductors and B2B semiconductors. So B2B would be like data centers, military aircraft, and so forth, those type of semiconductor demand. But in consumer semiconductor demand would be like mobile phones, tablets, cars, even I was showing the remote from my car, right? They all have semiconductors. So this chart right here, I was telling them that it's really important because there's been a huge decline recently that mimics 2000, 2001 and 2007, 2008. So that's just another, kind of bearish indicator that we just want to be a little cautious about. Though I'm still bullish on software, guys. I still think software stocks will go up, maybe in a recession, because they're so lean and they're not capital intensive. So that's today's focus. Today we're really going to talk about venture capital. It's.
So what's your opinion on Microsoft?
I'm super bullish on Microsoft. Now, Microsoft, you think is probably, do you know the business model of what they do?
Yeah, they're like cloud business. And
Yeah.
software.
Yeah, so they got like a B2C. They're like B2B to C. And maybe even B2C to B, okay, B2G to B2C. Business to government to business to consumers, right? They sell to everyone with the Azure cloud and stuff. So I'm extremely bullish on Azure. I guess we'll acknowledge that today. That's probably, the people in here know that's like my number one favorite stock in here, Microsoft. That's more of a blue chip, long-term, robust play, though I do have some like options on it. So I play from a leverage perspective. I really like Microsoft. I mean, what question did you have about Microsoft? Like, why am I bullish, or
Yes.
what was my take on it?
Yes.
Yeah. So if I were to perform the quick technical analysis, I mean, it's just robust sales and earnings. So look at this chart right here. I'm trying to close this out. This is their earnings right here. So robust earnings and robust sales. We could even go 30 years back, and I'll show you guys the 30-year financials of Microsoft. I have like 35 pages to go through today, so bear with me, guys. This is our discussion today, and it's really based off of two of these venture capital reports that I got from Battery Ventures. I think it will definitely add value to our software analysis, as well as when we go out and network in Silicon Valley. We would pay attention to more of these executives who kind of just live in the Bay Area. Like, holy crap, whenever, hey, what's up? So I was just kind of looking in, like Coupa Software, right? It's here in San Mateo. It's $6 billion in market cap. This thing could go to $60 billion, man. this thing is this stock could 10x. Now this is all for educational purposes only, right? And we're not going to analyze this until the end. This is the Coupa security right here. So the chart looks really bullish, but from a beginner, right? A beginner, you would have a hard time buying at highs. Typically, when a stock goes ATH, all-time highs, it's extremely bullish. So this security is at all-time highs. It's extremely bullish. Last week we were looking at this because last week we were dissecting portfolios of the different type of money managers out there, right? You got some money managers who are all ETF, some managers who are technology concentrated, some money managers who are global macro, some managers like George Soros who are like short seller bias, or and so forth, right? There's so many different mix of investors out there, but for me personally, I think I follow Stanley Druckenmiller the most in terms of style, portfolio composition, or whatever. I like what I see in his portfolio. So we were looking at hedge fund portfolios last week, and we noticed a concentrated amount of key players, very big funds, invested into Coupa software. And so I did a little bit of analysis. I was actually in San Mateo yesterday because I like to bring my secondary research to primary research and check out the corporate headquarters. Because when I used to work at Morgan Stanley, there was a guy who, older gentleman, he would bike around into corporate parks and stuff. And the nicer the buildings were, the more he would invest. And his portfolio did really well. I think that's a great, hey guys, the semiconductor guys are in. Do you guys like carpool?
Yeah.
No, I'm just kidding. Yeah, today we're gonna talk about venture capital. It's gonna be super exciting. Cause these reports got me. These reports got me extremely bullish. Since we have some of the semiconductor guys in, could I bring back up the question on semiconductors, or you guys want to just kind of carry on?
Yeah. What's the question?
Yeah, so Dave's new. He asked me about what's my take on semiconductors, and I gave him like more of a global macro view on semiconductors, and I brought back this chart up, right? Because last week we kind of talked about semiconductors, but I wasn't too well versed in it, so I did some analysis, and then this is like a key chart for like an economist, but basically I've dissected the revenue of semiconductors to two segments, right? B2C and B2B revenue. So I was telling them that B2C revenue for semiconductors would be like consumer demand products like laptops, phones, cars, and such, right? If we see a slowdown in that's caution right there. Consumer slowdown in semiconductors.
Yeah, that's why Apple is very important
But exactly. But then there's also B2B semiconductor demands, and I was saying like military jets, boats, and so forth, right? Those are very key, important. This chart right here, the blue line is the revenue line. It kind of consolidates everything. So that's why I really, this chart to me seems very critical and important right now.
It's very cyclical.
It's very cyclical, yeah.
So always, and
So
I guess because of China.
I also brought up the how you guys were saying 5G is going to change the game, right? I agree. That is the evolution of the next generation of consumption.
But what drive it that we don't have all the application for it?
Right. So that's where hardware that's where I drew up this chart. And oh shoot.
They're
Whoa.
a solution looking for a problem. So they're already like working.
So what's the demand driving?
So it's like a 5G is like trading, right? It's like trading software stocks. Think about 5G like that, where we're buying the stocks before they even earn anything, right? So when I think about 5G, I think about the current inventory of semiconductors, and then you're talking about 5G semiconductors, right? See you guys? Yeah. So you're talking about, what was I saying? The 5G semiconductor inventories. How are we going to consume that next batch when we have this old batch and on top of slowing consumption? That's where my concern is, right? I know it sounds very juicy about the new next generation of semiconductors, but we got to be aware of like the existing infrastructure demand for semiconductors.
Yeah, if you look at the food chain though, if you took this 4G iPhone
Yeah.
and replaced it with a 5G iPhone,
Mm-hmm.
the real question would be what dollar value is the 5G component in that particular device? Because
Yeah.
this also has memory and it's got a display and it's got
Yeah.
glass and it's got a whole bunch of crap in it that adds up to cost of, let's say, $300.
Yeah.
So that $300, what value did the 5G component companies get
Right.
out of that total 300? It
Right.
might be actually a relatively small amount.
Right.
So if you're, let's say, investing in the leading, mining company that makes the battery technology for the phones that are going to be refreshed,
Right.
you might actually do better than the actual chip company that makes the 5G component, because there's more money spent on that lithium whatever component than the
Right.
5G itself.
Right.
But lithium is abundant, that's why the mining companies are not doing as great as gold. So lithium is not as
Yeah.
scarce as
I mean,
Just to use an example.
I mean,
what I mean, like the Gorilla Glass company, Corning, might actually do better than the 5G component company, because in this phone there might be more dollars in the Corning glass than the actual 5G chip in it.
That's already been priced in. They had a monopoly, so that's been priced in. I think the value would come in the AI and the digital assistant part.
So other
Which-
yeah.
I mean, it won't be like physically viable, and there'll be more resolution and all that stuff, which you don't care. But the value would be in the analytics.
It's
and
more
the
like
Yeah,
AI.
tangible.
So
The point I'm making is, if everyone refreshes their phone, half the world says, throw my 4G phone in the garbage. I'm gonna buy a Samsung or an Apple phone, right? Like one or the other. So if you look at the food chain, another billions of dollars are gonna be spent on new phones. So what companies are gonna profit from that? It's all about spending. If I can get 10 billion spent on new phones,
Yeah.
where does the profit come from in that 10 billion that's spent? Because it's not all just the 5G component from some company that makes it, it's all the other surround, all the other stuff.
So I will bet on the component
Guys.
suppliers of the phone.
Let-
Like
So
the
I work
the
for
sensors.
Qualcomm, which
Yeah.
makes the 5G component. So what happens is in 4G, the chip
It's the
was
5G
like
guys.
$45.
Yeah.
Now it's gonna cost you $75 because of 5G additional features that have come in. It's much bigger and more expensive. So if you see 30-40% more, and that would lead to at least 25% more profit to the component.
I think Lale had
But
a.
OEMs
Lo-
will go up to.
And you also got to think about the things that you can do only with 5G.
Yeah.
What you would never do, like
Yeah,
IoT.
what
So-
I'm saying
so
is,
we-
what's
we
the
also-
demand for there is, but
we-
maybe the timing and everything.
We have to. Okay. So I mean, there are things. So going back to Dave's question about semiconductors, right? We got the semi guys in
Cycle,
here.
right now we got
Yeah.
cycle.
It's a huge cycle.
Yes.
We got to measure existing
Yeah.
inventory. We got to measure future infrastructure demand, also future emerging demand like 5G, right? It's a hard topic.
It's
And
just
then
like
if
a
you,
business cycle upgrade.
if
When
you
we
want to
upgrade
dissect the
for this
origins,
cycle.
you could look at the commodities, right?
And this
Oh.
will directly translate to data center growth.
Yeah, yeah,
Sure.
yeah. Dude, everything's connected,
Yeah,
man. This
yeah.
is so darn interesting. So we'll hold the 5G or the I know the semiconductor guys came in, but we'll hold it till the end.
5G is just one component, which is accelerating, but there will be other components.
Yeah.
Yeah,
Okay.
the next big thing, whatever.
No,
we
I mean,
push to drive.
guys, like, I mean, as much as
But
we
we
talk
don't know
about,
when, but
So
when
when you
we-
say what will 5G enable, it will be the IoT that will come really into picture.
No,
the
Yeah.
point I'm
So far it's
making-
more of a talk thing, but really it will take place when the 5G infrastructure is there.
The point I'm making, if everybody throws up their iPhone and buys a new one, then Apple's value just went up another 500 billion. You know what
right,
I mean?
right.
So like, it's all in the food chain like
Yeah.
we're talking about. It's not just
So I'm-
the Qualcomm chip, it's the
Yeah.
components that are collected, that I drop $1,000, let's say, on a new phone.
Yeah.
That grand goes to the bottom line of Apple, so you could have just as easily bought Apple and made a 30% return also.
So it comes down to consumer cost benefit analysis,
Yeah,
right?
absolutely.
If the benefit is greater than the cost, then I'll go
Yeah,
purchase another one.
exactly.
Absolutely,
But if it's not, then I probably wouldn't.
right,
We're pretty advanced today.
yeah.
So we'll see how it goes. But anyways, guys, let's hold the 5G conversation towards the end. We'll circle back if you guys get really passionate about it, because today's a software discussion, right? Oh yeah. So on top of that, I want to say we also have to measure the evolution, advancements of the application demand too, right? Because that ties into semiconductor demand. But today's very focused on software. So let's see. Let's get started. It's already 17 minutes in. Today's technical discussion number 117, I titled it as "Software Continues to Eat the World." Right? It's not Andreessen Horowitz. Software is eating the world. Oh, we have some seats up here.
There's a couple of seats.
Yeah, you two could split up over here. I apologize. Yeah. So I gotta start figuring out.
Bigger room.
Yeah, it's gonna be fun. Man, I can't stop this. This is too fun, right? Especially when you find great investments and it pays out. Cryptocurrencies this week was pretty aggressive. Like,
You saw what
It's-
happened yesterday night?
yeah. But I think it's the first inning. It's still the first inning for cryptocurrencies. So if this really runs, then a lot of value will
This
be.
always happens, like weekend you'll see a spike and then they will dump
Yeah.
before Monday.
Yeah.
And then markets will follow.
Yeah, the interesting part about cryptocurrency is that it doesn't follow like standard trading hours. This is a global game and there's global liquidity, so that's something to consider. Anyways, guys, let's kind of get started. Welcome. I know there's some new faces. I'm Kay, the enterprise guy. This is my technical discussion number 117. I title it "Software Continues to Eat the World" versus "Software is Eating the World," right? And I think there's substantial upside. And so today's discussion is very venture capital, very Silicon Valley, very software focused. I hope it inspires you guys or anyone to go chase venture capital, because this is the only area to do it, right? And I realize this, not just because of that one chart I always show you guys where the most venture capital transactions are happening here in Silicon Valley, but also I saw some actual numbers, and I'll skip ahead because I read 2 venture capital reports. They were both altogether like 150 to 200 pages this week, but I really just pulled out the best of the report and then put it on here. So I want to show you something real quick, skipping ahead. The reason why it was just so mind-blowing seeing those numbers, right? I'm going to bring up that chart that we always see. So this is the chart right here, right? So if you want to do venture capital, it's only here in Silicon Valley. Why? Because it's like options trading. Would you do options on penny stocks? It wouldn't work. You do options on S&P 500 ETFs, right? So because there's a lot more volume. So if you want to do venture capital, it's here in Silicon Valley. Number 2, well, Silicon Valley is at 12,300 deals or transaction. My theory at this point is who's brokering those deals? Who is the market maker? Who's getting those fees, right? And I mean, I have a theory that the stream is really going to these accelerator incubators and top tier VC names, right? And someone always has to broker a deal. Every time there's a private market. So keep in mind, there's a lot of talent. And there's a chair right here if you want to be okay walking in. You might want to go this way though. Well, either way works. So keep in mind, the volumes here, the activities here. You guys know Salesforce, right? The tallest building in San Francisco. It's worth about 1.1 billion, right? So wait, where's that chart? So this is Salesforce right here, right? Cost is 1.1 billion. It's owned by Boston Properties. It's not owned by Salesforce. There's just a tenant, right? So if it costs 1.1 billion and it's the tallest building in San Francisco, you know, this is the chart that I came across. Oh shoot, where'd it go? Right here. This is the chart right here. In the US, the Bay Area was up significantly in terms of dollars and percentage, right? So I gave you the transaction volume in venture capital. If you look over here, right? So we're just gonna look at 2018. There's New England. Well, I think it makes sense to look at this chart first because they did a global analysis. So this is more from a bigger perspective, but US has 34 billion in dollars invested in venture capital. And in Canada, 1 billion, not even there, right? And Europe, 5 billion. So we know USA is the most in venture capital at 38.4 billion, right? And if you go down from 38.4 billion, the Bay Area alone has 20 billion.
Big chunk of it.
Right, big chunk of it, right? It's all happening here.
Yeah.
And it's funny because when I'm analyzing securities in the stock market, all these software stocks, they keep on going up, and nonstop. So this industrial 4.0. I challenge you guys to go look that up. Sometimes it's super duper interesting. So 20 billion here, right? And I told you guys the Salesforce Tower is 1.1 billion. That means there's like in a given year, there's been 20 of those buildings being rolled around this area. There's so much money here.
It means don't sell your house.
It means don't sell your house. Yeah, I think so. I agree because Koopa's in San Mateo. That's where I was yesterday doing some primary research, just trying to scope out the building, and then I scoped out the shareholders on Koopa Software and added them on LinkedIn. Right, there's some major shareholders here. It's funny because there are people, you know, you might buy 1,000 shares, you think it's a lot, or 10,000 shares on like Microsoft, you think it's a lot. I mean, there's some guys in here rolling around with a lot of money, right? It's some serious cash. But I mean, this gives you great insight into like the amount of money moving around, right? So because the Salesforce Tower is physical, you see it. It's 1.1 billion. You would see 1.1 billion tower move around physically, right? But you don't see this 20 billion moving around here in Silicon Valley. But it did this year. That's why it's like, wow, it's so exciting. It really sets up the basis to, you know, keep doing research on securities related to software, enterprise software, and so forth. So today's discussion is very centered around this venture capital report. I hope you guys don't mind because I know this is primarily a stock market investing group. It's just kind of, to me, I believe it'll help you, but it's really how you see it, I guess. But if you really want to talk stocks, let me know. So that's our discussion today. But before we start, I have this. I was looking at this morning. I took a picture of it. Be fearless in the pursuit of what sets your soul on fire. Because the more money you make, it doesn't really, it doesn't get you mental happiness. It's more, to me, it's more about setting targets for yourself and achieving those targets, right? So, you could be, I would say strive to, you could strive to make a lot of money, but strive to make things that money can't buy. So friendships, knowledge, health, those intrinsic things. But anyways, I just thought a cool comment to kind of start would get you guys excited. Be fearless in the pursuit of what sets your soul on fire. So figure it out. What sets your soul on fire? Is it 5G? Anyways, but usually before we begin, I do a quick market analysis of the stock market. So just a quick global analysis, and then we'll jump into the 35 pages that I have here today. So this part I'm going to go kind of quick. It's not a session where I explain on too much on what I'm talking about. But right here we have the stock chart of the S&P 500. It's closed objectively below the 50-day moving average, slightly bearish, but overall it's still in an uptrend. It's above the 200-day moving average. So that's what I see. A little update for this week. If you want a little bit more technical chart, this is what it looks like. So this is major resistance right here. Why do I look at the S&P 500? It's basically the heart of the economy, right? It's not a leading indicator, it's a lagging indicator. I mean, now that you kind of understand. Because something more leading would be like what we looked at, the semiconductor revenue stream, right? If that's in decline, that's like an underlying, that's under the hood of this, which this can't see. So this is why I look at it. This is one of those critical indicators. But so far it looks like this. And then someone, went ahead and drew a cup and handle. I'm not too sure if I agree on the cup and handle, but typically a cup and handle is a bullish pattern. And so this is what we have. So here's the so-called cup, and then this is the handle, and that, and then some.
The right side has to be lower for a cup and handle.
Yeah. So this could actually be a melt-up market. I'm hearing, right? We could melt up and go higher. That's okay, because I no matter what, markets go up or down, you always personally have to look for performance, right? Everyone's looking for alpha. Why do I say everyone's looking for alpha? You want more money, right? Or you want to increase your standard of living. Well, it really takes extra effort in things in life. So that's my take. Anyways, this is the chart. Maybe a cup and handle, but we'll see. We'll continue to monitor. Looking over at the other other beating hearts, Nasdaq. This is what I see: an objective close below the 50-day moving average. Not too signaling of anything. Just maybe some midterm caution, but nothing too much. That's Nasdaq. Dow Jones Industrial Average below 50-day moving average acted as resistance. So that's really where I'm looking at next. 260 and 50-day moving average are acting as resistance. So we have a few major indices kind of showing some bearish indication, just to be slightly cautious. But that's typical in a market pullback. Russell 2000 again back below the 200-day moving average. So that's what I see. Moving forward to the VIX futures curve. I know this is pretty technical, but we'll circle back maybe at the end if you have any questions on this. Just a quick overview. The volatility indicator hasn't been indicating much to me. As you can see, it's like red, green, yellow. So it's just been a poor indicator at this point. Nothing. It's not telling me a clear direction. So not much to comment on that. Bond market, same old, kind of just rallying up. So if bonds are going up, interest rates are going down. At least that's what the market speculation is. So if you're a bond market participant, and if you're trading bonds, you're a pretty big investor, trader, fund manager, or whatever. So if you're moving this, or if you're participating here, and this is, collective actions are pushing the bond prices up, what does that mean? They fear that interest rates might go down, right? Or they're speculating that interest rates will go down and bond prices will appreciate. That's like the ultimate trade, right? When you have like a 6%, was it back then? I hear so Stanley Druckenmiller's biggest trade, if you listen to his interview with, I forgot who it was, one of his biggest trade was actually a bond trade. And the bond was paying 6%.
What kind of bond is that?
It was a treasury or whatever. Back then it was 6%, right? So imagine the bond dynamics. He loaded up at 6%. And he loaded 40% of his portfolio at 6%, right? So, why am I drawing this? So we know let's say, if it's 6%, so this is the lever, right? So I drew a lever right here. So we know that at 6%, right? That's the interest rate. And then we know the price is right here. And this guy levered up 40% of his portfolio at 6%. Government reduced interest rates. He owned 6% contracts and appreciation. Holy crap. Think about that. He loaded up 40% of his portfolio, 6%. Government lowers interest rates, 6 to let's say 2, 3%. Those bonds just went up. So he capitalized, and he just sat there and just collect 6%, later capitalize on the appreciation. That's a powerful trade, right? That's the bond market for you. Anyways, US dollar continues to be elevated. Remember, when the dollar is elevated, it's high, it causes a lot of stress on the global economy. Just because we identified that the whole world kind of operates on the dollar. So just something to look at. So it's elevated as in it broke a slight pattern right here, slight trend, midterm trend right here. So it's a little bit higher, it's peaking up. So whenever it peaks up, just kind of be aware of that. Gold continues to be in downtrend, right? I'm bullish on gold, but midterm, short to midterm is downtrend. And then gold miners looks like this. Holding, GDX is the ETF that tracks gold miners. Joe, we have a seat over here, if that's okay. Yeah, so it's still holding a 200-day moving average, but this is more of the indicator than the gold miners. Looking at emerging markets, so trade wars, right? Emerging markets, another angle. We have developed markets like Japan, Europe, and so forth, and USA, but we gotta look at the emerging markets like India, Russia, Brazil. If dollar's going up, emerging markets get hit, so this is what the charts look like on top of trade wars. This is what the Shanghai index looks like right here. I know it's kind of sparse because it's not a super active high volume ETF, but I use it to kind of track what's going on in Shanghai, right? Because I want like a global view of the world, what's going on. Looking over at some developed markets, this is Japan. Japan's a major market, just like the USA and Europe, right? So we gotta look at it as well. It's like the just as much as the beating heart's important, but maybe your spouse's beating heart. So this is kind of like that. Broke the major midterm trend, and now potentially setting up a bear flag. Could potentially go lower, but that's what I'm seeing. So I want to see if this area continues to act as support, right? Because it acted as resistance right here. Prior support becomes resistance, right? So this could be support. If it breaks support, then that's sort of the next signal for me to kind of be a little cautious. Again, I just kind of stair step the risk management up or down, whichever direction. Looking at Europe, so Doris had a comment. Gold, silver is also experiencing the calendar effect. Will break. Yeah. So if we had a back tested chart of gold. I gotta show you it. It's super duper interesting. Damn, I really wanna. Let's see. Gold back test 75 years. There's a chart on it. What do you need to know about this? Let's see. Gold cyclical. No. Tendency. Okay, I'll circle back with you on the chart, Doris. Doris is from LA. Yeah, I'll circle back on that. So anyways, Europe. Stocks 50. Prior resistance acts as support. So I'm seeing 3,300 act as support. So this is still kind of recovering since November, December, right? Same thing with the DAX. Still looks okay. So that's emerging markets. I'm sorry, developed markets. And then the last part, quick update on cryptocurrency. So we've been watching this pretty actively just because the cash flow or the money stream or the momentum is there. There's a lot of eyes on cryptocurrencies right now. So I anticipate this to be like the early demand or the early symptoms of reversal. Where do I think it'll go next? If you ask me immediately, so if I were to draw or tell you guys a story, right? So if you know the bigger picture of cryptocurrencies, 6,000 was a super critical major price area. But once it broke that price, bear flag, set that go lower, right? And so we gave it some more time to consolidate right here. So now we sort of have a rounding bottom. And then just recently in April, right, maybe after taxes, after everyone did their taxes, right, you see some high volume right here on this gap up sort of, or this just kind of zip up, and then consolidate right here at the 5K. And then it finally broke 6,000. So back to where it was consolidating for a super duper long time. So now I see that there's some interest here. My concern right now is that there's too much interest, right, on very extreme high volume. So it's telling me that direction wants to go up. The only issue right now is that it's just a little overextended. The rubber band's to the upside. So this correction is prone to these type of corrections. right? But what I'm eyeing right now is if 6K will hold. So that's important to me. Where do I think it'll go next? I think it'll just kind of consolidate somewhere right here. And let let the previous losers get out, and then the next speculators get in, or whoever investors, and then it'll set up and see where it goes from there. But there's nothing guaranteed in markets, but we did the analysis on Bitcoin or cryptocurrencies. There's many dimensions of analysis that's very critical, right? One is demographics. How right now, when I look at my fellow millennials, they don't really have an asset class to invest in that has upside. But when you talk to them, it seems like every single one of them knows cryptocurrencies, right? So you got to think about this from a bigger picture, global macro perspective. Every generation needs an opportunity to build their wealth. If not, then those generations can't have kids. or buy a home or whichever, right? It's some serious infrastructure nature of the world. Dora says, also if you have time, semis also have a seasonality effect. Maybe you can address this later. Okay, I will try. I have 36 pages to go through. So besides Bitcoin, I'm also looking at XRP, Ripple. Guys, this is not a recommendation to buy or sell. I'm just showing you very active charts right now that sort of attract me. So same dynamics right here, but nothing much. And that's pretty much it on the quick global analysis of markets. Any comments? Or it's been kind of just like sideways, slightly neutral to bearish, nothing much.
The Indian market should have a bounce this week once the results of elections are due, like coming.
So Indian markets, I track INDA.
IND is also weak.
Mm-hmm. But remember, India falls into the category of emerging markets. So if the dollar rallies, it'll hurt the.
It was like election results uncertainty last few months.
Yeah. So I'm bullish on India. You want to know why? I mean, the charts look okay. Number of people, the quality of human capital, the demographics, the age of the population. I hear it's a lot of young professionals who really want to consume. Did you see that IKEA picture that you sent me? Yeah, so there's a lot of services to be developed in India right now. So it's definitely an emerging opportunity in terms of like they have jobs. They're the middle class is growing. They're going to consume insurance, real estate, automobile, whatever semiconductor needs. It's just timing right now, right? It's just the dollar that's going to affect that. But let's continue to see where to next. Anyways, that's the quick review of global macro or financial markets. We're going to jump into today's interesting discussion. At least I found it very, very interesting. Any questions or nothing? Are you doing okay, Dave?
Yeah.
Okay, well, let me know if there's something you guys don't understand. I'm pretty open about helping out. So, should I give you guys a little insight on what I did this week? This week I didn't get to read Barron's this week. I know Bernard did, so I'm kind of jealous. I have it with me. I'm going to read it later after this. But this week I really spent a lot of time reading up these two venture capital reports issued by Battery. So Battery Ventures is another one of those top tier venture capitalist firms here in the Bay Area. You're here in San Mateo, San Francisco. There's just so much money flowing around that I just feel like consumers don't see it, right? So on top of like Battery, there's like Greylock, Sequoia, KPCB, and so forth. So the report was like 92 pages and 75 pages or whatever. It's just everything about software and why they're long software. And in this club, we kind of evolutionized to really investing in tech just because it's been the outperformer. And if you perform analysis on like margin analysis across all the sectors, right? The 11 sectors, so like utilities, basic materials, industrials, technology, financials, healthcare, and so forth. The best ones, at least in my eyes so far, and I might be wrong, or I might have a bias, so up to you and your judgment, but it's technology, healthcare, and financials. Those are some serious high margin businesses, especially software. So that's why I want to kind of just zoom into a particular segment, because if we do have like a global macro pullback, then hey, I want to be invested into like some of the best asset classes out there, right? And if you analyze like the really interesting money managers today and what they're chasing, yeah, I mean my favorite investors are chasing software securities. So let's jump right into it. I just had a pause in my head just now, like we have exactly the right amount of seats in here. Yeah, I just kind of realized that, like maybe just one, but that's okay. I mean, I'm not asking for more. Yeah. So hey, No, thank you guys for your time. It's it's wet out there. It could be dangerous to get here for some people, but thanks for coming out. I have time after this if you want to chat like personally as well. So feel free. So why are we long software, right? If you read their 2018, this is actually their 2019. This is a really fresh report. Okay, to tell you how fresh, let's see. You can look this up yourself. Battery Ventures, just on their website. As simple as that. Great. I asked you about battery a month ago. Okay, all right, so we're going to talk about today, so I hope you enjoy it. So this is Battery Ventures. They manage quite a bit of money, but it's, through our analysis of securities out there, leveraging Crunchbase and stuff like that, we see a lot of these big players just plowing into the private marketplace, right? It just seems that with all, the easy money environment, low interest rates, money being printed, or free money, they call it, everyone's squeezing for performance, right? And you see like SoftBank making like the biggest venture capital fund out there, trying to get in before other investors. So it's getting super competitive. I see it. But this is the report right here. All right, so you guys could take a look at it yourself. But the opportunity it's massive. I was going to show you the date. So this was issued. Let's see. Is there a date on this? Just want to show you the date. It's 2019. Well, I guess all I could tell you is 2019. So within the past 5 months. Anyways, so why we're long software? Overall, software spend continues to grow, right? And if you look at this chart, you're probably wondering like, well, it's kind of declining. Well, keep in mind, this is CAGR. This is compounded annual growth rate. Compounded means, for example, let's say you make a trade on MongoDB. You made 100,000. You take that 100,000, you compound. You put it back in, and then you grow at 20% again with that 100,000. You take that, you plow it back in. So that's compounding, right? So this is some substantial numbers. 18% for software, SaaS spend, software spend. And then we got, subscription software spend. And then this is other software spend. This is probably like middle market software. Something that doesn't have a subscription model probably. Maybe software services. IT spend, right? IT support probably. Or other IT hardware, software. And then just the total right here, right, of GDP. So it's becoming pretty big in terms of GDP. I know you can't see it, but it's actually the green line right here. So software is becoming pretty substantial related to GDP. But the key thing I want to point out here is compounded annual growth. SaaS is 18%. So you could reinvest and it'll still grow double digit. That's impressive, right? Software has consistently grown through different eras and delivered models. So this is just a nice way to kind of show you the evolution of software. Homegrown internal software to on-prem mainframe, and then now SaaS. SaaS meaning, I was listening to Real Vision, and I'm going to show you some clips this week, and it was a guy who's up in SF, and he's a venture capitalist managing about 550 million. Blumberg Capital. He said that this is like the greatest time to be an entrepreneur. At the end of this presentation as well, Battery said, this is the best time to start a software company. Because it's so lean, you got the most disruptive technology with the biggest reach. You can start it in your boxers in your room, right? And you're the CEO of a $1 billion company, maybe, right? But it's definitely a great time, and this report really opened my eyes to it, so I got really excited about it. Any questions on this chart right here? Just again, showing you like the growth dissection, right? Software continues to grow as a percentage of GDP. So you saw this chart already, but this is a cleaner chart. It's just showing you, it's just single-handedly showing you the percentage of GDP. So GDPs are what we produce as a country, right? Our economy. This is 2 point whatever percent of it. So that's impressive. That it's just something, it's not physical. Like I said, you're not seeing a bunch of Salesforce towers being pushed around from San Francisco down to San Jose. Right? But that amount, but 20 of those towers are being moved around, at least this year. We just didn't see it. Becoming a major component of your economy. Okay, I don't know why I put that. Anyways, the 5 forces of software accelerating growth. Number 1, existing software markets are growing over time, which I showed you guys. Number 2, software is infiltrating what were once niche markets. So this is actually pretty interesting. It's creating businesses out of very specific niches. For example, Salesforce is CRM. Right? Sales, customer relationship management software. But now software could penetrate very specific services, probably like a Ring Central or like a Coupa technology or Coupa software. Coupa does BPM. Is it BSM? Business services management, right? And
Expenses, man.
yeah, expense management, which is pretty big as well. I want to show you at the end, but I'll show you a little taste of Coupa and how exciting it is. So what Salesforce is to CRM, Coupa is to BSM, right? And I'll show you the chart later. Very, very exciting because this thing's only 6 billion. And what was Salesforce? 150 billion? I forget. So,
Bought out,
huh?
we got bought out by other company.
You
Cooper, we got bought out by other company, right? Maybe buyout.
you buy out your company?
No, Cooper will.
Oh, yeah.
Not a big guy will buy them.
Yeah, so yeah, not everyone goes into mergers and acquisition, right? But people don't understand that you could significantly benefit yourself by acquiring a company, right? Why do you want to go 0 to 1 when you could go
Yeah.
leverage and get to 1 and go to 2, right? I learned that only recently. Like it took me a year from running. Okay, I ran this. So this is my 2 year and 6 months now, right? It took me 1 year to figure that out, the whole mergers and acquisition thing. And I'll tell you why. So my sponsors are a real estate investment group, right? They pay for my mixers. And we've been working for like a year and they're like, hey, we like what you do, man. Can you take over this meetup? And I'm like, okay, sure. And then now we took over like, I think 4 meetups or whatever, 4+ meetups. And it just grew, I grew substantially. So I realized that I grew a meetup for 1 year. It went from 0 to 400 people, right? In 1 year. I acquired this one stock market meetup that they referred to me, and it was at 300. Now it's about to be 600, and that was like less than a year. You acquire for growth, right? That's why Microsoft's acquiring GitHub, Salesforce acquiring MuleSoft, SAP acquiring Qualtrics, BlackBerry acquiring Silence. So that's why we always have to analyze the mix of the entity, right? So BlackBerry, if they acquired Silence, it's no longer BlackBerry. It's something else now, which we want to get exposure to. At least we want to capitalize on that opportunity.
Yeah, no, it's very encouraging what you're describing. I think a lot of people can learn from that. If the software industry is growing, like you're saying,
Yeah.
and you're investing in 10 companies that are having sales growth of 30% year over
Yeah,
year,
yeah,
you're going to do well.
yeah.
You're betting on the right horse.
And we're going to talk about those multiply. We're going to talk about the fundamental momentum today.
Right.
Meaning, if it's growing at 30%, the way the market prices in is very interesting. Like something with a 30% will probably go at like a 20x multiple
Yeah,
versus like a 10x growth.
The point I'm making is when you have a stock portfolio that represents value, and you're investing in companies, you're investing in value generation.
Yeah.
So if you're investing in a company that's gaining in revenue at 30%
Yeah.
and accelerating,
Oh yeah.
you're sharing in that overall.
And high margins too. Don't forget.
Absolutely, exactly. Especially
That's
with
scary,
clouds
man.
and so on.
Yeah,
So,
you got my hair
so the real
standing.
lesson here, though, if you can ignore the little dips of Donald Trump having some China thing
Yep,
for this week,
yep,
and that'll go away in a month. I mean, all those kinds of things, because you're still
Yeah.
getting a piece of the action of the revenue growth from strong companies getting stronger. Just look at Amazon. Amazon Web Services growing at 51%
I
year
agree.
over year.
I agree.
I mean, that's spectacular.
Those are some crazy numbers, and it deserves a premium for
Absolutely.
that growth, right?
Absolutely.
Because
That's
it's
what
like,
Warren Buffett's back
and
and
it's
stuff.
not easy. Here,
Yeah.
I'll tell you this: like every top agent that I met, real estate agent that I met in here, I mean, you become a top agent really. It's just meet a top salesperson. They really make all their money because they got the word of mouth network effect. Where
Yeah.
so many people know them, they're just getting deals. They don't have to pick up a phone call and call. We
Right.
cold call initially anyone in here that wants to start a business. We pick up a phone call to cold call to ask for business because no one knows us.
Yeah.
So if you go out there, put yourself out there constantly, people get to know you, you will win deal flow. Trust me. Now I'm trying to win the venture capital deal flow. So it makes sense to start an incubator, accelerator, right? It's not a one-man job, but along the way, along the adventure, you meet exciting people who are excited about it.
Yeah.
Make it happen. Hey man, shoot, this entrepreneur has a qualified deal. It's a qualified entrepreneur with revenue and customers, and they're growing at 20%. Private transaction, man. Let's do it. So the way I'm seeing it is Coupa. You look at you analyze the leadership or management. They came from Marketo. Marketo got bought out by Adobe. But hold on, Marketo got bought out by Vista Equity Partners, my favorite private equity firm. Private equity that does venture capital-like investments, bought out by them, restructured, renovated, whatever, flipped to Adobe, and made $4 billion. Right? And then now they're in there. Now you got to buy Adobe if you want exposure to that. So very exciting stuff. It's happening here. Took me a while to realize it, but the more I see it, the more excited I get. Number 2, software is infiltrating what were once niche markets we talk about. Number 3, software is displacing hardware, something we'll look at. Software is displacing services and labor, right? Now, if you're someone that's, very career driven, because there's only 3 ways to make money, right? Career, work, and business. Work, business, and investing. Those are like the 3 ways to make money. So if you're very career driven and you want to protect yourself from the next disruption, I think today's session will help you out, right? It just kind of aligns you to where the industry is going next, where Industrial 4.0 is going. Really look that up. Industrial 4.0 is really interesting. Number 5. Every company is becoming a software company, right? So if you're really about the jobs or recruitment or whatever, this is where the things are going right now. At least the way I've chased money or tracked the flows of money, it pushed me to this direction. And this is one of the finest cash flows out there that I've seen. So I'm happy because, we probably pay a premium for this coffee compared to if you're in like the Midwest. But that's okay. We pay a premium because we're next to these great things that I think a lot of people in Silicon Valley are underappreciating. And it's only held by certain C-level executives who know what's going on because they're in the market, right? Let's jump into it. So Aaron, he's right over here. I had a chat with him this week. I just thought I'd pull this in. So every company is becoming a software company. This is basically what I'm seeing through analyzing acquisitions, internal organization experiences, and listening to earnings calls. Sorry, that was from the previous one. But we had a chat yesterday. I thought this was pretty interesting, so I pulled it up. So what were we talking about? Also, why do you think I host? Okay, so we were talking about this investment club, and he said, I can tell you're just evolving the club based on your interests and ambitions, right? I would also say I'm evolving this club to keep it modern and not let it fall into legacy investment techniques and market analysis, right? Though understanding old and new markets are very important. Because I've been in a legacy company, like Morgan Stanley. I categorize as a legacy business. They're outdated. They just got a lot of deal flow. But they're so big, so much regulation, so poor in technology stack or systems, that they're just a target for every software company, right? So to manage that operation is very challenging. I've been in one of those, and I'm in startups. And I see the difference here. It's like Barbarians at the Gate, that book, where you're now I'm excited because I'm thinking like, okay, I'm a little person looking at the Salesforce tower. How do I get in there and intercept these high multiple human capital, right? It's a super duper exciting place when you see it. So I just want to say that I'm evolving this club to where, with my own discretion, where I see it fit, right? I want the club to kind of grow. I do have an idea of starting an incubator. Let's say if I secure some commercial real estate like workplace, I'll bring this club into that incubator, and we'll just keep teaching through there. That's what I'm excited about. And then from there, if we get the entrepreneurs coming in, and if they have a great idea, hey, you can buy the equity right there, right? Because everything comes down to those big deals. It comes down to human interaction, right? You could buy a phone or a laptop $2,000 online, but do you buy a home, let's say, online? Not quite yet. Not quite yet, right? Some do. Yeah. Yeah, let's say some do. That might be a situation for realtors, right? But you don't do $1 billion deals or $100 million deals over the internet. It's always relationship driven, right? So that's why I'm not only am I, at one point I was really about the career, the work, but now I'm really about the investing. But I'm also about the business. And when it comes to business, it's all about network. It's all about who you know, right? Investing is about what you know. Coming back to what we were talking about earlier. So I think having a little bit of both is very good, especially in venture capital, where it's like it's a type of business where you need to know what market segment. You got to be really intelligent as well as having a network to pull it off. But if you do, it's super lucrative. Going back to my days at Silicon Valley Bank when I saw these balance sheets, that's like the one thing I will never forget, right? And if something tells me that one day I got to move this club to like Menlo Park, Palo Alto, Sand Hill Road, if we can just secure a space there on the cheap, like this one. This is Cupertino for $150 a month. This is what we get, so not too bad.
You're gonna pay for this, right?
I do.
You pay for the use of this room.
Yeah, I'm a realtor here, but I don't push the
I thought
business
you
too
get
hard.
this for free. There's no employee. No? Oh, Oh, I didn't know that you're
So
actually.
I gotta explain to you the brokerage model. I showed it to Baroff, and he was like, "Whoa, KW is a platform. Each branch is independently owned. So this Cupertino branch competes with, let's say, a Palo Alto branch,
Right.
right? And if it's independently owned, then each one has its own shareholder, equity holder, right? And that equity holder is just owning a business, my efforts, let's say, and they will just take on it's a recruiting firm. They just want to recruit as many because you get people to pay for the facilities. It makes sense. They wouldn't allow this type of risk right here. There's a liability. I have to pay insurance for this type of liability for people to walk in. Let's say someone gets hurt. It'd be on them. Well, it'd be on me, then on them, right? So it's not free. But I see the value in it. So the value is that you get to meet high human capital, high value, right? That could start a global company. So that's my take on that. We could talk more on that if you like. Next slide. Existing software markets are growing over time. So this is what it looks like. As you can see, there's different segments: CRM, ERP, HR, accounting, expense management, procurement, and so forth. That's why there's so many software companies we need to pay attention to, right? Because when we invested in MongoDB is the best in class in terms of like next generation database. But then now we got Coupa Software is like best in class in terms of business payment services. So this market is just like it's still the Wild West. There's still a lot of upside. I'm just trying to figure out like how to capitalize on all this. I don't operate a fund. Sometimes I wish I did, right? Because it's like, well, I alone can't buy all these securities. But if I raise a hedge fund, now I could purchase, at scale and then get a fee on management fee as well, right?
Do you foresee like a consolidation on the last column? Because
There will always be consolidation.
because they're in two
yeah.
niche areas.
Yeah. If you analyze every emerging market, right, it starts off sparse, random names. Yeah, when was the last time you seen a Saturn vehicle? Saturn car brand, right? So as the market matures, they consolidate, right? Just like how like this investment club, you could say, because I ran it so long, I kind of mature, and then now it's like I'm starting to consolidate other meetups. That's an example, a micro example versus like a macro example. You see it all the time. But anyways, going back to this, right?
Quick question, so why box?
Why what?
Box,
Why box?
No, box the company.
the company.
Why box?
Yeah.
And it could be enterprise level, right? Because most of the time when investors think about, most investors that I meet, they focus on the consumer level. They don't think about the enterprise use case, a B2B use case,
Box it do really good.
right? It might not do good. I mean, I'm not saying, oh, this is the best. I never said that. I'm just showing you the evolution of software, right? It might not be Box. It could be the other one, which is Dropbox, right? But there's a lot of big venture capitalists backing those companies. That's why we pay attention to it. Now, this doesn't mean they're great companies that I circle. I'm just showing you that these are securities we looked at.
Are they
I mean,
like
I really like Workday. Educational purposes only, okay?
is it the one
um,
you circle that in like a top 3 or I mean?
I just circle it in terms of like, we ran across these companies as an
Okay.
investment club here.
Okay.
Right? We talk about these companies. I talk about how serious they are. I mean, if you look at Workday, dude, I mean, other ways to capitalize on this, not just like meet the employees at Workday, buy some real estate in Pleasanton maybe. I see a lot of money rolling around there. But anyways, I just want to stress that it came from the mainframe era to the client server era, desktop SaaS era, and then cloud first era.
Sure,
Right.
really put 5.9 in the cloud one, by the way. And TalkDesk, it's a great company, but you can't invest in it. So I mean, it's nice to watch, but you can't profit from it.
Yeah. It's because it's private.
It's private, so
Yeah.
it's you can't.
But when it's public, and if we're as savvy as we are as software investors, and we know the valuations, the multiples, and all that, there's opportunity, right? We can. I mean, us as public investors, as a public group, we can only do so much, right? But we can analyze how they are being developed in the private side.
I understand though. Concur, why is that a desktop software as a service? It's pure cloud. Why is that a desktop company?
It started off in the desktop SaaS era, and then now we're in this era. So it's probably evolved into that now. If that makes sense.
I thought it always was cloud based, but maybe not.
Yeah. Well, maybe they didn't start off as cloud-based. I mean, Salesforce did. I think this is just one segment, and they're just trying to strip it between 2015 and beyond. Let's just take it with a grain of salt.
Whose graph is that?
Battery Ventures.
Yeah, I think there's some incorrect data.
So this
in
chart
there.
you find from that company with battery.
This is from the report.
So they
Yeah.
actually have a track record to invest in the past, right? Obviously. They know the whole thing.
Yeah, they are some serious.
Oh,
Yeah,
so they know everything.
yeah, there's some serious mergers and acquisition groups in San Francisco who really know this space extremely well. So now, if you look at design, this is like the 2019 version. I also pulled stuff from the 2018 version. So this is the 2018 right here. I just thought it was interesting. Existing software markets are growing over time. So this is what it looks like. SAP, down to financials, expense management, and procurement. Man, look at that. All right, global CRM market, bam. Global ERP market, bam. And then BI, business intelligence market. These are some serious corners that are developing in our markets today. I start off as like more of a trader, and someone who really appreciates the Market Wizard series. If you know those books are amazing. But I was more of the guy who studied transactions. Right, economics is about choices. Definition of economics is choices. So I was really the guy who studied transactions, and so that's kind of like I wouldn't say I'm a finance major. I am, but I'm more of an economics guy. Because I love studying transactions, from money transactions to social transactions. Why did I decide my choice to build my LinkedIn profile? Right? Because I see a capitalization opportunity. I see the appreciation effect of that. I see that it's a high value tool to network with B2B guys. Right? You're never going to see these executives spend time on Facebook. They will, but they're spending it for consumer purposes. If you really want to target venture capital, they're going to be on LinkedIn. And I'm starting to see this. I'm seeing this develop. So yeah, this is what it looks like. So keep in mind, CRM is Salesforce, ERP is SAP, global BI would be like a Tableau, right? Those are some securities that are focusing on those markets. Software is infiltrating what were once niche markets. So here's an example of like what they meant by niche, right? Because I don't know if my explanation earlier made sense, but let's say, for example, now there's these types, so I highlighted in yellow right here, right? For people online. The yellow parts right there. So there's niche business opportunities. What does that mean? Let's say you're an entrepreneur in here. You can start a business in one of these niche markets, right? If Salesforce is so big in terms of their platform, well, shoot, build on top of it. Don't go make a platform, right? Like it's like being a real estate agent. Go join KW or Intero or Coldwell Banker because they already got a platform of agents. Learn from those agents. Then once you're proficient, get the heck out, go start your own thing. Right? So like me, if I want to break into like incubators, accelerators, I'll probably start with like, hanging out at 500 startups, plug and play, Y Combinator, and just like frequent myself like, hey, I'm the enterprise guy. Right? I built some cards to kind of do that. So I'm excited about that. But anyways, there's scheduling, expense management, bookkeeping, individual mail clients, CRM, software project management, SaaS, translation services, e-commerce checkout, image optimization. So there's a lot of opportunities right now, especially in the software space, the micro niche markets, and it makes sense because, I've been a guy who analyzed like small businesses, right? And I realized I've come to the point where you could analyze a cafe, evolve the cafe, or go a little bit higher, logistics company, or go a little bit higher, like a vineyard or whatever, right? The numbers are all the same. Right? If you look at stocks long enough, you start to see not just the cash flow, but you see the difference in the efficiencies. I'm convinced that some of the biggest middle market companies in the world today are Amazon.com FBA stores, fulfilled by Amazon stores. So why? They built those stores off of Amazon, right? Amazon already has the customer. Sales and marketing costs a lot. But these guys, these FBAs, they're building on top. And that's why when I'm on like a digital business brokerage website, so it's like digital mergers and acquisition, right? Or website mergers and acquisition. Maybe I want to buy a website and passively operate it because I see the time efficiency. Why do I want to spend 40 hours operating a cafe? I have a buddy, he owns a pizza shop. And I'm like, hey man, you own a single pizza shop. You're doing pretty good. Why don't you go 2-3? And he's like, man, you don't get it. The moment I scale to 2 or 3, I lose my time for a little bit more money. I knew that, but I was just joking with him. So then I looked over to digital businesses like online, right? You can go to empireflippers.com and stuff, and they'll show you the multiple of these businesses that are selling. You could buy, let's say if you're passionate about pets, you could buy a pets website. I'm not saying pets.com, but let's say petsgroomingservices.com, and it's selling for $1 million. If it's selling for $1 million, that means it's making about $250K a year in net income. Not bad. Remember I said acquire for growth. right? If you see the big guys doing it at a macro level, you as an individual could acquire a Meetup for growth, acquire a business for growth. You could acquire income today. That's the crazy part. That's something I feel like I didn't think about soon enough. Like I could, let's say I look at a cafe, this cafe is making 200K net income. Okay, I'll leverage up 400K, 500K instead of buying a house. Now I instantly have 200K in income. But I got to pay down that debt after 2 or 3 years because that's the multiple, right? Versus people buying real estate and they're trying to rent it out, but it's not even break even. It's actually at a cost, right? You're buying a piece of real estate and you're betting on the appreciation. So every month you're spending like $300 extra just to kind of break even. So I don't see the economic symmetry opportunity there. And that's why I notice when first-time investors, they get in, they're like, oh, I want to invest in the real estate market. And I look at those numbers, just like very passionately look at just the numbers. I don't see the attractiveness unless you're going for the appreciation, unless you have the capital up front and you just want passive management. That makes sense, but I see more value. It comes down to valuations, right? If you're a valuations expert. Anyways, moving on to the next slide. Niche markets are getting penetrated. Again, I think I showed you guys in the chat already, but look at the bottom corner right here. Software engineers, number of jobs, outlook-wise, right? Jobs outlook, 24% from now until 2026. I told you guys before that, there's like the stereotype that engineers make a lot of money. Well, shoot, software companies are great to invest in. So the next stereotype I hear 10, 20 years later, when they say oh, AI data scientist people make a lot of money, that's where I should be investing.
Absolutely.
Consumers see it in a different way versus like the business people. So I want to feed off of these messages that I'm seeing. Just a great way for you guys to capitalize as well. So hardware engineers. Now, I'm not trying to, I don't mean to be offensive or anything, right? But this is the objective outlook, 5% growth. Interesting stuff. So on the chart right here, past this point right here, the blue line, cloud IT infrastructure, right? And then this is the spend on the non-IT infrastructure. So yeah, cloud is definitely ramping up, something we have to pay attention to more. Next slide. Software is displacing service and labor. So these are just some headlines that Battery Ventures pulled. I thought they were interesting as well. The first one, AI and RPA. I don't know what RPA is, but will absolutely positively threaten your job. RPA is having a moment. What you need to know about automation technology.
Process automation.
Process automation.
Or robotic process.
Robotic process automation. Right. So yeah, I mean, if you ask me as a software guy, right, what is software? Okay, software, hardware. You guys already know software, hardware, right? If you know software, hardware, you know AI and robotics. Because software, evolution of software is AI, smart software. Evolution of hardware is robotics, smart hardware. Right? It's just another way.
Basically, RPA will displace all the white collar jobs.
Yeah.
You mean blue?
Yeah.
You mean blue?
You got crackers over there, Joe?
Amazon.
Robotics
Oh, no, don't worry about it.
will displace blue collar jobs. AI will
RPA is the equivalent of robots in the Tesla factory, right? Why do I need a human to process an insurance form when I can get a
Yeah.
scanner to scan it and process it
Yeah.
at zero cost?
So when I was in college, and I met the hedge fund manager who mentored me. He was a guy who focused on volatility trading, and his background's in PhD quantitative math, right? And I asked him hey, he's a big data guy. What jobs out there? Because I was in college. I was at that point where I was looking for a career as well. What jobs out there make sense for the finance person with all this disruption happening, right? I'm like, what's the evolution of a financial analyst? And he said, captain at the helm, which is like the guy who manages the ship, right, at the wheel or whatever, right? He said that every other job will be disrupted, and you will just need one guy to do the analytics. One guy will be the FP&A and all for the financial department in corporate finance. And I'm like, oh crap. If that's the case, then where do I go protect myself? Well, he said one thing that robots will never disrupt is sales, human relationships. Yeah, that will probably, the more technology advances, I feel like it'll streamline to that it'll make the human relationship more important than ever, right?
I'm sorry, I totally disagree with that. Every purchase you make on Amazon is RPA. Do you talk to a person? Do you press a signal?
Right,
Nothing.
right,
You
right.
basically press a button on the screen, a back office procedure generates to a person who puts a label on a box and it ships. So the human involvement in that transaction is almost zero.
Yeah, I mean, aren't we in agreement then?
No, the robotic portion of Amazon has displaced. Look how they're removing people from factories.
Well,
paying
I'm
them
saying,
$10,000
yeah, I'm in agreement with you. I'm saying sales will be a thing that cannot be disrupted.
It depends what you mean by sales.
High level sales.
High level sales, sure.
Deal flows. Deal flows.
Well, I mean, there's something about sales, right? I've dealt with an AI who called me before, and I was like, okay, this was a really good AI, and I wish I saved the phone number and I could share it with you guys, because I literally picked up, and it was like, hi, this is Karen. I'm like, Karen, where are you calling me? Well, I want to call you today about blah blah blah, and it sounded very real, and after two questions, I knew it was a robot, so I started asking questions, and the robot just kind of it kept answering, and it was pretty realistic. It was an insurance company, and I'm thinking insurance companies are starting to leverage this technology already, right?
Yeah, it depends on what you mean by high value, right? I mean, booking a vacation for $2,000 for a lot of people is a lot of value.
Right,
But
right.
you can go on Airbnb and book a $2,000 suite and not talk to a single person.
Yeah, yeah.
So I mean, the human involvement has gone possibly to zero
Yeah.
in a lot of industries that used to be go to a travel agency and it was 99%.
Yeah, these travel agencies are
It's gone
dying
to
out.
zero.
Yeah.
Yeah.
Dude, I don't know where the disagreement is. I think I'm in agreement with you there.
Well, maybe, right, no one's gonna buy a house from a chatbot, right?
Oh yeah, well,
But-
yeah.
right.
The bigger the asset, it's all value, right?
Right.
It's like with technology today, it's just raising that value curve where it's like,
Absolutely.
you know, with our technology today, I could do a 25K purchase without a car dealer,
Absolutely.
a car agent, right? It's just we have to figure out what's that value that consumers will want a representative,
Right.
right? For me, I deal with contracts that are 100K plus. Of course, they want to deal
Right.
with people, so that's the difference right
Absolutely.
there.
But wasn't Tesla doing online purchases completely online, where you didn't talk to anybody? So there's a
I can see that
$50,000
happening where it's like they got so much network and
Right.
brand reputation where people just know what they're getting.
Yeah,
So they'll just be like, I'll buy it online. I don't
Yeah.
need this sleazy car salesman.
that's incredible.
On the Tesla, you can buy online for the same price. If you talk to a representative, he will give you $1,000 off.
Oh, okay.
You see? You see, that's like going back to the chart above, right? The changing economics of it. This is the situation right
Yeah.
now. And I just feel that the more I teach, the more I learn, the more I share and all this, I see like the behaviors of people, and it's just, people do not behave on there's no irrationality.
Absolutely.
People are behaving on irrationality, emotions more than anything,
Yeah.
right? Like I see the opportunities to capitalize because everyone's going this direction. I was telling Aaron, like everyone's knocking on the doorstep of the venture capitalists. If you want to work for them, you'd probably be better off meeting all their investments, which is the people that they're investing into, right? You just got to think critically for a moment, like where is the best value of your time? So that's why I say this, you know, I joke, well not really joking, that this club is so valuable in my opinion now, because you guys to me, living in Silicon Valley, are a higher multiplier. If I were to quantify the people, I know it's kind of emotionless, but it's a higher multiplier crowd than if I were to run this in Kansas. Because there's so much value the way we bounce ideas, right? We got the semiconductor guys in here bouncing ideas with us.
Sure.
That's the cool part. And they're bouncing from ideas from like Dell to AMD to Intel, like, right? It's funny how I listened to a venture capitalist and he says, what is the biggest issue with Silicon Valley today? And I thought it was like housing, right? Like living. In his eyes, it's talent.
Was that
Talent.
Talent.
Corporations are having a hard time looking for the finest talent to bring on.
Right.
And it makes sense because I'm driving up to San Mateo to do research on Coupa software. As I'm coming back, I see like 5 billboards on, you know, Coupa software, Monday.com,
Absolutely.
C3 Enterprises. Why are they selling so hard physically? Because I see it now. I see it so clearly now. You know, it's like I said, I've been the guy who look at assets in terms of like, I grew up looking, where is the tallest building? What's the most expensive car, let's say, or expensive home, right? But then now I've realized, because, you know, teaching people, meeting people, that it's not the corporation, right? I mean, the biggest building in SF is 1.1 billion. Salesforce is 150 billion, let's say. I forgot the number. But it comes down to the people at the end of the day. That's what I realize. It's like, don't chase the, don't chase the assets, chase the people. Because the people is what really invented the assets. So knowing that and seeing the market direction, I feel pretty passionate about building, like, let's say, a software developer community, something like a GitHub. When I'm not going for a GitHub, I see Microsoft's acquisition of GitHub and LinkedIn, where they're acquiring. Remember, acquire for growth, right? They're acquiring a developer mindshare community on GitHub. What can come out of that? It's like the digitized incubator, right? Like whatever ranks up on GitHub, they'd be like, all right, we're gonna, the corporate corporate developer guys, they're corporate investment bankers. So investment bankers within Microsoft, hey, this just went up on GitHub, guys. We gotta go, be there and front run these investors. So it's a.
Like they don't share the data. Even the company acquire the bigger companies, they have their own contracts.
Yeah.
And
Oh.
share the entire.
It.
Microsoft acquired everything. It doesn't mean that he knows everything about profession, right?
So the data I'm talking about is your ranking in GitHub, like App Store. Anyone in here could see the App Store ranking. Now we're a full. Oh shoot! Last seat. So yeah, going back to your comment, it's the data point is public. It's the market data. I'm not talking about the GitHub specific data. I'm talking about it ranked up in terms of consumer demand.
Okay, got it.
Right? That is the valuable data. Anyone can see that, but no one looks at that. Right? Just because I've been looking at stocks for a while, and when I see someone like a burst of acquisition of a share or shares, I wonder why. So it's actually pretty interesting. So let's go along right here.
That's bad. Hardware engineers?
Oh, you weren't looking. I mean, this was the previous slide. Yeah.
That is not
Hey, I mean, I didn't mean to bring bad news for you semiconductor guys. Yeah, I'm just kidding. Now, no. Well, hey, on the bright side, if you're software on hardware, firmware, you're still pretty important, right? Because when I listen to like a Arista Networks earnings call, they talk about how they distinguish themselves through their software. So like something like a Pure Storage, right? It's hardware, but it's really the software. Right? There's still layers of software if you know the space really well.
They're reporting next week, this week.
Which one company?
Pure Storage.
Pure storage?
Going on to the next one. Number 5. Every company is becoming a software company. So, me listening to the venture capitalist discussion, and he was saying he used to work at T. Rowe Price, and he was a technology analyst. And as a technology analyst, he saw all the public securities just go up or whatever, and they were all tech stocks. Well, because he's a technology analyst. And now later he left, and now he's a VC in San Francisco. So I kind of think about that. Like my path is similar in a sense where I'm looking at stocks, I'm trying to find alpha, and I found alpha here. And then I realized alpha is actually around me, right, in the local area where I live. So super duper exciting stuff. So we look at the acquisitions. Let's look at, I don't know if you want to look at the later ones. I want to look at 2018. 2018 was like a hot year for acquisitions, right? Because we got like 20 billion and stuff moved around. But the acquirer, Broadcom, California Technologies, or CA Technologies. Let's see, AT&T, AppNexus, 3M. I want to find something that I really know, right? The whole point of this chart is just to show you that.
Disney?
Yeah, well, I mean, the whole point is to show you that basically, if you're in, let's say, corporate finance, the way they view an acquisition is through numbers, right? Let's say Google, if you listen to Google's earnings call, they'll be like, okay, Google's, I forget the margins, but let's say 65% gross margin. If we acquire this big company, will it change our current 65 gross margins to 60? But in the future, it will be higher. Right? But how would investors react if it goes to 60? 65 to 60? You think that's not big? On $100 billion cash flow, whatever, $50 billion cash flow, that's a lot of money. Right? So when these guys are acquiring, they really think about how will it disrupt our existing portfolio. Something to really, really pay attention to. Right? I hope this stuff kind of helps you guys in terms of investing, or like, if you're like a major shareholder of a company, like, oh, why are you investing into this? Like, it's going to hurt our margins, but we're not chasing the cash flow anymore, man. We're chasing the data, we're chasing the human capital or whatever. So very interesting stuff. We're still okay. So how big is this market opportunity? If you looked at today's meetup, you saw the chart already, right? But this is where we are today. And you see how like the chart kind of sets itself up for like 7 trillion up there, right? So us thinking, or me thinking like, Salesforce at 150 billion is as big as it's gonna get. I don't know. I think it now seeing this chart, it could probably 10x to $1 trillion in value, right? Depending if we print more money. That's what I'm waiting for. So this is actually the chart right here, revealed. Right? Global software industry revenue. And I'm so excited because, well, if you have a long-term perspective and you know how to leverage in the public markets, all right, options on like Coupa software, yeah, stuff like that, do some leaps. You just sit back and, well, okay, this is not a recommendation. It's all educational purposes only. It's highly risky if you don't know what you're doing, but your money could really multiply if you.
The problem with all these continuous Geiger charts.
Say again.
The problem with all these continuous Geiger charts almost assumes that you will have like everything else kind of holds constant and you will become the power over the whole world. I mean, literally, if you're going to go to $7 trillion, that is almost 1/3 of the U.S. economy, right?
Yeah. Now,
Right.
the reason why I used to look at assets before, right? Like focusing too much on assets and now focusing on humans, because it comes down to like just your respect for someone else, right? I met some corporate people where I know you just got paid out on your deals, but they spend no time talking to like pawns, they would call it, which is kind of like, I wouldn't want to do business with this person, They don't have a value system. The difference here is that I used to be the asset guy, right? I'm tracking assets. Well, assets appreciate in a very linear fashion, right? Over here, you see the exponential, that zoom up, that momentum to the upside.
Right.
It's, I view it as you can't value human effort, right? This parabolic nature is a combination of like human effort, also the technology. So I don't know how to explain it. Like assets have a very like let's say you do commercial real estate, 50 units apartment, right? It has a very predictable cash flow. But something like a business backed by human efforts, it has that human exponential factor that will just like zip it up in value, right? And that's something that I don't think even I could even value. So yeah, it's interesting because if you go on LinkedIn and you look at some of these venture capitalists or these let's say angel investors, right? They'll put in their LinkedIn title and say, looking for the next entrepreneur to work with. You mean to buy their equity, right? Because I believe now that it's human efforts that could outperform in terms of alpha an asset class. Yeah. So I think that's my sort of my explanation on that chart. I don't know if I made sense. Anyways, going to the next one. Oh, no. We're only halfway, guys. Let's see, battery ventures. SaaS companies are well outpacing broader-based indices. Now, we all can relate to this, right? Yeah. What I have right here is the S&P 500, the NASDAQ, and the Dow Jones. Look, check out the SaaS index. It's like, right? So, I mean, if we just pay attention to a sector that's outperforming, I'm not saying you could, close your eyes and invest and succeed, but it just seems that way, right? This is like, what, 4 or 5 times? It's ridiculous.
Is any ETF track that anybody knows specifically for SaaS?
Sky,
Or Sky?
with 2 Ys.
Okay.
Yeah. Now, how about performance in a recession, right? Do we have 2008? Right, that's something to pay attention to. It might outperform lower. I wish we had more data points. That would be really cool. But yeah, that's the today's the SaaS day. I hope you guys don't mind. SaaS multiples recently traded up to an all-time high. So remember when we said SAP acquired Qualtrics and BlackBerry and so forth? They acquired for like 15, 16x multiple. They bought it at the top. I wouldn't say at the top, but they bought it at an extended valuation. They're willing to pay even more, right? After some point, when I look at some stocks, like the smaller ones like Carbon Black, I'm not worried about investors, consumer or average investors buying this. I'm not worried about that. I'm worried about the enterprise that has the funds to buy out that company. That's the real competition at this point, right? Because if anything, like you have to, when you bet big enough, you become an enterprise basically. But anyways, this is a nice chart to show us SaaS multiples, price to sales. So right now the market's trading at 7x, not really a 15x. 15x was an outlier, and we'll see that. We'll see that in the charts coming forward. So when we're valuing something like a carbon black, let's say it was a 5, right? Then maybe it's off by like 3. If the market, but this is how you want to constantly track these multiples. Multiples are expanding across the growth spectrum. So this is what Bernard said earlier. This is how the markets are treating at 30x, not 30x, at 30% growth, right? If you have 30% revenue growth, the markets are willing to pay 10x plus. I know it's 10x plus, it's not 10x, 10.5. So it's all about your sales momentum, fundamental momentums, or technical analysis of fundamental analysis, right? You can perform technical analysis on, this is fundamental data, right? So here are the multipliers right here. Look at Z-scalar, 27x, MongoDB, 24x, Elastic, 21x. You're experiencing a lot of growth, and that's the explanation, the premium explanation, right? All the way down to the end, which is Ring Central, 27%. Yeah.
27 is insane.
Yeah. Let me recall what the numbers were. So this is the growth revenue, so it's 39%. And the market's willing to price it at 27 times market cap.
You know how much they're pricing Xilinx? 10x. Less than that.
Which one?
So that's
Xilinx?
hardware companies are always like,
What can I say about you hardware guys? No offense. It's you provide a at the end of the day, hardware provides a critical economic indicator.
software doesn't run on thin air.
Yeah, I know. Hey, remember, we travel like this together, right? Software, hardware. So yeah, this is super fascinating to me. Just now we have a better understanding of the software market when we invest as public investors, right? Just let me know if you have any questions on this. It's really, again, this is the sales revenue momentum. So 20% year over year, 22% year over year. So the market's willing to price it at 13x, right? So this is across the board here. So let me ask you this trick question, or maybe a trick question. Where do you think I'd be eyeing? That end or this end?
Say it again,
What's that?
Where do you think I would personally want to buy stocks? This end or this end?
I'll buy all of them.
Huh?
Right.
I'll buy all of them. It's diversity.
I'm focusing on this end, right? I know it's weird, but if you trade long enough, these are the ones that outperform. It's the ones that go up, they keep going
But
up.
you believe in buy high, sell high, right?
Yeah,
Yeah.
it's really buy high, sell higher, and then when you're short selling,
Yeah.
sell low and sell lower. I'm sorry, buy low and sell lower. Yeah, something like a Tesla breaking down right now.
Yeah.
It would be like a moment to sell.
Well,
But it's the hardest thing to do. That's the
just from my experience with these, when you get some type of an economic landmine, like the whole economy's going to hell or China, whatever, the ones on the left are the ones that seem to go have a knee-jerk reaction to go down. And
Yeah.
when the crazy's over, go right back up.
Oh, yeah.
So you got to watch for the ones that are hit more than they should have been.
Yeah.
Is what it was really an important
yeah.
observation.
So that's why we observe the S&P 500, right?
Absolutely.
When I see the S&P 500 red as crazy, and I'm
Yeah.
looking at a software company green, that's a contrarian indicator that I should be paying attention to this company.
Exactly.
That's why when we look at charts like MongoDB, right? Well, let's see what happened in November, December. Oh, it went sideways. This is a powerful company.
Like carbon black's a perfect example.
Yeah.
The market goes crazy
Yeah.
down.
Yeah.
Carbon black goes up and is
That-
likely to go higher.
That's how you find relative value, right? When the broader markets are selling off, why is this special group buying?
Exactly.
Do they know something, on the inside?
Yep.
So those are some techniques that you can use as a market technician or
Absolutely.
someone with great market instincts. Yeah.
You mentioned you're bullish on the Microsoft, but where is Microsoft?
Microsoft's different. Microsoft's like a $900, $1 trillion
It's a
company.
growth.
This is growth. This is growth territory.
That's not growth.
Yeah, but I am
That's
bullish
a
on
dividend.
Microsoft. Microsoft at this point, it's like
Blue chip dividend.
it's the
Bond-
best house you could buy in the world.
It's a bond type
In-
of
in-
investment.
Educational opinion, all right, guys? Not a
I'll
recommendation.
support that
So,
opinion. Absolutely.
The chart that the battery has prepared, is it for ones that they have invested or it's just a broad overview of the entire market?
I'm sorry, the charts that they provided, it's a broad overview or
Or is it only the companies that they are investing?
oh
or-
broad overview.
Broad
This is market analytics right here.
Okay.
Remember, it's now you know this, right? But it's gonna help you go out there and meet who you know. And the way I see it at this point is what I like to talk about is very enterprise level. Right? I mean when I let's say as a real estate agent, I meet someone that wants to buy a home, most of the time I'm talking about like, what do you think of this marble countertop, right? It's not my style. I could do it. Don't get me wrong, but I geek out a lot more when like talking, let's say, to an investment banker or a corporate buyer or a corporate seller. Like, why do you want to sell? What's going on with your software company? Those conversations, like that's the thing about engineers, right? I feel like you can already speak half of the language, a high multiple language. You just need to learn the finance part, and you go out there and be slinging deals, right? Think of Khosla, Vinod Khosla. He's in Sand Hill Road, right? He came from a engineering background, right? Now he runs a VC fund, Sun Microsystems and all that.
So something to think about. I keep talking about how if you spread your chips over multiple stocks. So if you would have bought Ring Central, Five9, and let's say Twilio,
Yeah,
in a year you would be up more than 100%.
yeah.
Just think about that for a moment. Most
Hey,
institutions.
we have those numbers. But
Well,
go.
just think about that. If you go to Wells Fargo Financial Planners, they'll say we can get you a 7% return. But if you would have picked those three,
Okay, man.
you'd be over 100% higher in a year.
So I came from that side,
Yeah,
Morgan Stanley Wealth Management.
yeah.
That's basically the pitch.
So you're going 14 times better
So-
than the professionals who want to charge you 1% assets under administration.
And it's really, it comes down to, remember, not everyone in this world, 30% of the U.S. population have a 4-year degree.
Yeah.
We're just saying 4-year degree. And then 10%, they say, of that 30% or whatever, have a technical degree.
10%? The whole population?
10% of the 30%.
In Silicon Valley?
The U.S. population. You could Wikipedia that
That
or
sounds really high.
it's not very high.
That sounds high to me.
That sounds high for
10%
you?
the whole country?
No, 10% of the 30%.
Oh, okay.
So
Yeah.
3%.
Right? Have a technical degree, right? Because you could have a 4-year degree, but you could do it in, let's say, history. History is a powerful degree.
No, yeah, history.
Jim Rogers?
Yeah.
Yeah, seriously.
Philosophy, those guys crazy.
But degree doesn't determine like where you go in life, right? I mean, I look at a lot of these CEOs who have like the Harvard. I don't know. I'm not a
So if
believer
your
in that.
graph is correct about cloud and software growing like this, these companies, had you spread your bet over 20 of these, you'd be between 30 and 100% up in a year.
What do you think Sequoia is doing? What do you
Absolutely.
think Greylock and Battery Ventures is doing?
Right,
They are just compounding like, we got a unicorn. Let's take this unicorn gains. We'll put in 4 more unicorns. Oh, we just got 4 more. Let's just keep recycling that and compound.
So there's that saying, when the tide comes in, all boats rise. Right?
Yeah.
So basically, if the multiples are going to be maintained between 10 and 30,
Yeah.
and that software curve is going like this,
Yeah.
that means as long as the whole world doesn't come to an end,
Yeah.
you could realize a 30 to 100% return in 2019 and 20 and 21 if you spread your money over companies that are getting stronger,
Yeah.
like the Microsofts of the world also that
Yeah.
are getting stronger.
Yeah.
So
my-
place your chips and
And
enjoy the ride.
Microsoft bought Smartsheet, right?
Say again?
Smartsheet got bought by Microsoft.
No,
No, who bought? Somebody bought Smartsheet.
they're standalone. I just sold Columns now.
No?
Yeah.
They-
No,
I
but
think they're still-
Microsoft is a world-class group, right? And they have world-class valuation, meaning best. I believe they'll create value for shareholders.
Smartsheet is just Excel.
There's your carbon bottom.
Yeah.
But the stock keep going up.
So this holds true across all groupings of growth plus profit. So in SaaS, guys, there's this rule of 40.
What is that?
The rule of 40? So the rule of 40 is basically 40%, when you have the growth percentage and the profit percentage, when you add it together, let's say, for example, the rule of 40 means it has to be over 40 to be a strong company, right? So let's say profit is 20% and growth is 15%, together you have 35%. That didn't hit the rule of 40%, right? So this is an example of rule of 40. So over here, the 10% on the left shows that they're not hitting the rule of 40. So carbon black. That's why it got beat down, right? But it's only one of 3 in a growing cybersecurity AI market. So that's something we have to be aware of. So remember, SaaS companies, it's not about earnings, it's about sales. Can they change the sales, right? Focus on the sales first. That's just the nature of the security. So Babu, I don't know how to help you out there. Wait. he or she can't hear me. Okay. One person can't hear. I don't know. So you could also dial in. There's a phone number. You could dial in. Yeah. I bet you Naveed dials in every once in a while. Was he in the room?
He left, but.
Oh yeah, he probably left with a phone, maybe. Just kidding.
Can you go down? I just wanna see the formula.
The formula?
I mean, I'm trying to understand the rule of formula.
Yeah. So let's say growth, year-over-year sales growth is 20%.
Yeah.
Plus profit.
So they're saying FCF profit, the free cash flow.
It'd be
something like
yeah,
that they wrote it
because
down.
there's no profit, so we're then using free cash flow.
Okay, yeah.
So maybe like operating cash flow, EBITDA.
Cash flow.
Yeah. So they're using like other.
That's interesting.
Yeah. So this is the formula right here that they're using, right? But the other rule of 40 is just something I pulled online. Anyways, MongoDB rule of 40, 20, 30%. These are the powerhouse.
Yeah.
Where's Viva? Pleasanton.
Pleasanton, yeah, I know all of them.
Real estate in Pleasanton is pretty hot. I'm seeing it. It's crazy. Yeah, I know you guys are taking pictures. I could send you the doc later. I mean,
It's online, right? Is it- No,
Yeah, it's
but
online.
these are your notes, right?
oh yeah, these are my
Under
notes.
media,
Well,
right?
I could send you the notes later too. Which I, yeah.
Just some clips so I can
Yeah.
look at it later.
Yeah. Any questions on this rule right here? It's interesting. The cool part is that it's all here. I mean, a lot of it's here.
Well, not a question about that, but maybe you guys have a folder or something that you all share, so we just get the notes every time?
Oh,
Puts it on the Telegram.
Yeah, I put it on the Telegram.
All of them?
I mean, when you guys ask, I'll just throw it in there. It's a link. Keeps it simple for me. Hey, don't worry about the doc. You know, you just hit me up anytime.
You should leave that up there though, because people can learn from the diversify among the giant strong companies. I mean, that's a good shopping list of putting 1% of your portfolio in 100 different one of those, and you'll do remarkably well.
Did I ever tell you I wake up excited about all the opportunities in the world?
Absolutely.
When you see the opportunities, what did I start with today? I said, be fearless in the pursuit of what sets your soul on fire. My soul is like infinitely burning, man. Because I see it happen here. It's not just okay. So my journey in like learning and all that, right? At Morgan Stanley, they teach you to target people, right? And I wasn't a big fan of that. Now I'm in B2B. They teach you to target executives, or they teach you to target corporations. But I target executives. But at the end of the day, you still target people, because business is sales. That's just how it works, right? I took the learning of every journey, and I pieced it all together. And because I came from Silicon Valley Bank, believe it or not, private banking, we target people. How do we target people? There's something called term sheets that's issued, I think, by Fortune 100 or whatever, Fortune.com, and it'll show you the private equity venture capital news of every week. And every week someone gets a liquidity event. When they get a liquidity event, like let's say for example, Carbon Black went IPO. Well, the private bankers, they want us to reach out to these high net worth here in Silicon Valley and say, hey, we're Silicon Valley Bank. We do private banking services. We know you just liquidated. They wouldn't say that. We know you just liquidated Carbon Black. If you need a wealth manager, here's our card. That's just how business works, right? So everyone's always targeting. I mean, we want to invest in something that's targeting really well and winning those targets. So chase what sets your soul on fire, man. This stuff actually gets a lot more interesting. So I hope you guys are okay on time, because we have about 30 minutes left, but I might go on. Let's see, the next one. So we did the rule of 40. Next one is 2018 proved to be the best ever for software IPOs. 2018 was a breakout year in terms of IPOs. Basically, right? So the last high was 2012. And you saw 2015, 2016. What happened in 2015, 2016? S&P 500 went sideways.
Yeah.
Interesting how it affects the IPO markets, right? Also the mergers and acquisition markets, which we will look at in a bit. So this is the new IPO. So nothing too interesting here, I guess.
2019 is like equal or bigger, right?
I don't see the name.
I don't have the live analytics. Most of these analytics are proprietary. Right, where it's like you want the analytics, you gotta go talk to Quadalyst partners or Catalyst partners. Next one, software companies continue to outperform well in public markets. So this is what Bernard is talking about. Look at the delta after IPO. 300% for Zscaler after IPO. Yeah, I mean the only one that didn't perform is Carbon Black. I mean we're looking at it now, right after the beatdown. Dropbox, Zuora, Pivotal, Ceridian. I haven't heard of DocuSign. I'm looking at 2018 by the way. But yeah, the deltas are crazy. Okta 500%. I'm sorry, Alter X. Okta is 387. Cloudera. I mean, I'm looking at Cloudera now, right? Because it looks like a beat down chart, and I see a lot of high quality VCs backing that company. Yeah, Coupa 400%. I mean, you really just need one of these.
But now we know, right? Let's say you,
Now we know. And
but
we,
should, in the back, let's say we have the same company, whatever number, IPO in 3 months. So my next strategy, I just, because we know nothing, just everyone just
okay,
allocate 1%.
so Ed, you sound like someone that's gonna like dump your life savings into
No,
something.
no,
You know,
no.
these are just. I mean,
No.
Bernard's right? Like out of 10, like it seems
Exactly.
like 9 out of 10 would go up. It
So-
seems that way, but you
so-
still gotta. You never put down your risk management,
Yeah.
right?
So it's usually sound advice to invest in companies that are getting stronger. Okay, so Carbon Block goes public.
Yeah,
They're not
go on.
profitable when they go public, so it's a bit of a wild card, right? The stock goes down.
Yeah.
Then they announce that they beat every freaking metric you could imagine. The stock goes up 20% or so,
Yeah.
and could go back to where it came from, like back up and so on. So you could. No one really knows, but if it's growing in revenue,
Yeah.
those are the ones to bet on.
Yep.
Because growing revenue means growing acceptance, growing value.
Yeah.
And so if that column on the right, if there are companies there that are growing in value,
Yep.
you can get a piece of the action
Yep,
by picking
exactly.
a diverse number of them. But don't bet on one, bet on
Yeah, exactly.
20
Yeah.
of them. And if you get one wrong, well, one's
Yeah,
wrong.
we cover
Yeah.
exactly.
Yeah, it's definitely a hot segment, you know.
Yeah.
Like let's say an average Joe could just go out there and buy one contract on each options contract,
Yeah, exactly.
1 year plus,
Right.
right? And you just kind of sit back, let the portfolio do its job, if you have the discipline to do that.
And just look at that median percentage change, 79%. I mean, holy fuck, I mean, if you could get 79% returns in a year, you're doing better than any
Yeah.
money manager could
Yeah, so-
promise ever.
So going back to the consumer, professional, financial advisors, money managers, right? Yeah, you're right. They tell you we could get you 7%, but at the end of the day, their business, it's a business, right?
Right.
They want you to stay with them, right? You got 100 million, Bernard.
Yeah.
Bernard, what can I do for you? you invested 100 million into my Morgan Stanley fund. Bernard, man, you want to go play golf?
Someone wants you to pay 1.5% to
Yeah.
manage your money to give you a 7% return.
Yeah.
Whereas that graph is saying if I just picked any one of those 10, I'd get a 70% return.
Yeah, but you don't know that.
You don't know that, but I mean,
And as your financial advisor, joking, this is unsafe. This is growth, right? You got to think about how many kids you have, mortgage, right? I mean, these are. Hey, come on, man! Train rebuttals here.
it's remarkable.
Yeah, so it's a business in itself, and I hope that the more you learn about securities, you learn about business. This whole world operates that way.
Yeah.
So I mean, I'm not saying okay. As much as I'm bagging on it right now about that business model, it works for people who don't know anything about investing.
Absolutely.
Someone needs that help, right? And at the end of the day, they do provide that help. It's just not my target market.
Right.
Right, I'm excited about targeting these big corporate guys at this time, just because I understand it, and I realize that not every one of them is fluent, yet they got into that position.
Absolutely.
Believe me, I some Silver Lake guys. Despite volatility and evaluated multiples, software M&A continues to pick up. So this is the part where we transition to the M&A part of it, right? We look at the IPO, post-IPO performance. Now we're going to look at mergers and acquisition. The guys and girls who are buying out the entire thing. So like before, Qualtrics is up here at a 16x multiple, GitHub 15x, MuleSoft 15x. Why would a corporation acquire such an outlier multiple?
Right.
It's highly disruptive to their portfolio mix, right? But the current multiple is a 9.7, or is it? I can't see it. 9.7x that I have in the box here. So Marketo, Adaptive Insights, owned by SAP. Or is it Workday? So this is the
That's
market.
a great graph.
Yeah. So if you look at the acquisitions in 2015, I guess I forgot when the volatility started, but it was beginning of 2015, right? It kind of died out right here. Sort of, kinda. So you see how the tracking the S&P 500 is very critical. It hurts IPO markets. It hurts M&A markets, right? If you're an M&A banker, investment banker, I mean, you're a real estate agent, right? No, really, you're an agent. You're not the company buying, nor are you the company selling. But you're calling on companies like, hey, you know, Microsoft, you want to buy GitHub? Or hey, GitHub, have you thought about being acquired by Microsoft?
Yeah.
Right? That's what they do. It's these shadow bankers or whatever you want to call them. So those are the M&A multipliers, right? Now let's look at what I have over here. Software M&A since 2008.
Cool.
So software acquisition over time. This is the amount of spending. What does this tell you exactly? This tells me that the private equity guys are waking up. They're starting to see that. I mean, they're already active over here, right? These were like the old school, original, professional, you know, guys who are very casual players who are active all the time playing the game, right? Suddenly this year, 2018, everyone's jumping on the train. So that's something we gotta be concerned about, because that's something like just analyzing an overcrowded situation, right?
Too much money.
Yeah, too much printed money. It changes the environment as well, right? There are charts out there that shows you the price of the price of a certain product consumption after money being printed. So it's interesting stuff. M&A is heating up though, definitely, right? So if these are transactions, right? If they're invested, if they're acquiring, who's making money 2018? Mergers and acquisition investment bankers. They're having a blowout year 2018. Their bonus check or their commission check is like, right? They're chasing deals that year. Let's see. There were the same number of 1 billion plus SaaS deals in 2018 as of all 2014 to 17. So 2018 was a big year, and this is just a recap of it, right? So Twilio acquired SendGrid, Thoma Bravo, Aptus, Workday acquires Adaptive Insights, Adobe acquires Marketo, Salesforce, MuleSoft, Microsoft acquires GitHub, Vista, Aptio, Vista, MindBody. Vista's my favorite private equity firm because I see them all the time. I'm looking at Crunchbase and I'm like, oh, this looks like a great stock. Oh, Vista's gonna buy it? Yeah. I was eyeing Red Hat for a long time, but IBM bought it. That's something I don't like about public markets. So I guess when you don't like that and you want to participate still, well, now you got to transition over to private markets. But then that's a relationship game. This chart's pretty interesting. 8 of the top 10 all-time software acquisition multiples were paid in 2018. Valuations are going higher. So going back to SAP Qualtrics, yeah, they really priced it at the top. A new high, right? Question is, will other corporations follow that valuation? If they follow that valuations, then that becomes consumers or real estate people or whatever price is, we're gonna feel it because it's real estate is very local, right? Very very interesting chart. So
if software gets up, it will pull all boats along with it. So.
maybe 34 billion deal size, right? Acquisition size, so 8 billion. I'm curious about what the fee is for mergers and acquisition investment bankers. Right? It has to be like 10%.
That high?
I'm sorry, no, you're right. If it's multi-billion, it's probably 5%.
5%.
Yeah, for business brokers, 10%. Yeah, you're right. Smaller business broker, M&A.
Your deal flow would get you, let's say, 3%, they'd probably be at 5 to 6%.
Yeah.
So interesting part is the GitHub, the only company where the owner had still 30 to 35% of the equity.
The owner had it?
Owner had it.
Yeah.
Every time they dilute.
Man,
Yeah.
you want to look at Coupa? Let's look at Coupa real quick. Coupa is a little digress, okay? Jump back to stocks for a bit. Coupa, this is Coupa right here, ownership, and then I'll go on my LinkedIn as well. I've been adding a bunch of executives from Coupa, just so I'm trying to build up my executive network. Let's see, Coupa. It's not loading. Refresh it. Okay, we'll let it load. Anyways, with Workday entering the M&A fray, ServiceNow and Amazon stands as the only enterprise businesses on the sidelines, meaning ServiceNow and Amazon have not been acquiring, while everything else is acquiring for growth.
ServiceNow is growing organically.
ServiceNow is really growing. Yeah, that one's crazy. 80 billion market cap, if I recall. But Amazon, I mean, it's interesting how Amazon.
Not really.
Yeah, because when you look at security, right, and they show you like R&D spend, R&D spend is just like another word for like mergers and acquisition budget, right? I mean,
I don't think so.
you either build it or you acquire it, and then you build it from there. So.
So what does Amazon need? Which of those companies are they right to be evaluated right now?
Hard to predict.
Yeah, it's
Sachin can tell
so
you.
0 deals right here. We could look at it in a bit.
They're doing themselves.
Okay, so this next chart is actually really interesting to me. Vista and Thoma Bravo have separated themselves from the PE pack, private equity pack. So why is Vista my favorite? Vista's right here, and you can't see. Vista's the second one. All right, Thoma Bravo's right here. So these guys are the very casual software private equity, private equity firm that operates like a venture capital investments. Let's see, Thoma Bravo and Vista Equity Partners have respectively completed 28 and 26 software acquisitions over 500 million since 2009, with both firms investing 25 billion plus into software companies during the time period. Right? Yeah, this is okay. So what does this tell you? They are the buyer. They're not investment bankers. They're not mergers and acquisitions. They're not the broker. They are actually buying, like how we buy stocks to own. They buy to own. But what they do is, if you want to get into software investment banking today, not investment banking, private equity, these would be the go-to. They own all the specialized knowledge out there, right? If you remember what I told you guys about Vista Equity Partners, he has a secret server where only certain executives could pull, and it's called Vista Consulting Best Practices or whatever. So it's an algorithm, it's a playbook that only a certain amount of people could have it. Because if you see software in a way, and you look at the numbers long enough, it's 80% the same across the board, 20% different, is what the CEO said. I don't know why he said it's like chicken. the Vista Equity Partners CEO said, software companies are like chicken. 80% of it is the same, 20% of it is different. What's the whole chicken point? Huh?
Blames the eggs.
Okay. Yeah, maybe you're right. Yeah, you're right. Yeah. Holy crap. See, I didn't get that. Let's see. Can you also close the app and wait? Okay, we're talking about something else. Let's see. So that's the acquisition look. The next one I have is right here. To put venture software investing into perspective, venture investment in 2017 was still well below the R&D of Microsoft, Alphabet, and Amazon. So going back to the R&D, right? Even though they spent, M&A or PE firms spent 32 billion, these bigger guys, these cloud titans, have a bigger budget, right? So interesting stuff.
Also, a lot of these companies, they buy and they never disclose, so you don't even hear about it.
Yeah, private. Yeah, I'm curious to know how that works, but you'll know about public acquisitions.
Yeah.
Let's see. Okay, so this is from 2018's PowerPoint. SoftBank's fund size stands alone with powerful limited partners. So we know that they're the biggest venture capital fund out there, right? At 100 billion pending. This is from last year. But who are the people that invested into their fund? Well, the biggest one is Saudi Arabia. Remember Masayoshi-san in the video said 45 minutes, 1 minute, $1 billion or whatever. Every minute they had a conversation, the guy just kept tossing 1 billion at him. But it's interesting when you see it in that sort of perspective. So this is so these are basically the people that will benefit if SoftBank outperforms, right? Just say if I saw a fund, you invested in me, then you start to see the direct holders. Speaking of direct holders, let's look at Coupa Software. If it will load. Oh, here we go. So top direct holder. So who said that GitHub had, I think it was Brock, you said GitHub 35% owned, right? This one, the CEO actually owns quite a bit, 42%, and publicly traded. So Robert Bernstein.
No, this is 45% of the entire thing.
Yeah, so Robert, and it's funny, they're here in Silicon Valley.
Wow.
Yeah. People who own that many shares. Bernstein, is it spelled that way?
45% of the entire public, I would think 35%
Uh,
entire share of the
I don't think it's public. I think it's. I need to double check that. I need to like call like customer support on that or something. Yeah, I'm following this guy. Yeah, see, San Mateo. Sorry, excuse me, guys. To see that he owns, how many shares was that? Coupa, he owns 150K shares, right? That seems to be like the individual pain point where I haven't seen more than 150K shares. For the hedge fund, the most I've seen is 55 million to 60 million shares. So in any given day, this guy's going up and down in 150K in value, right? Look at this, since like IPO. So yeah, he's been like, oh yeah, this week, or this past few months. That's something I really want to train for, right? It's the really big positions and hold it over a very long period of time. That discipline.
It's gut wrenching.
It is when you know technical analysis. It's not when you just know fundamental analysis, where you're like, I don't believe in the technicals. But because I know a little bit of both, then
Ignorance is bliss, right?
yeah, in some scenarios. But it's very interesting to see their perspective.
Like
So
I know Tesla is going down, but I'm still holding it.
yeah, I know, right? There's a lot of hedge funds, yeah. You see
It
that?
has to stop.
Yeah.
You're making some people cry here.
Okay, all right. I'm sorry. All right. Wait. Well, I mean, honestly, bro. So Bernard always asks me about, where's that crystal ball? And I tell him I have a fuzzy. I have a very fuzzy crystal ball. And then last night I was just, I was just thinking like, I know he's gonna say that one of these days, right? And so I'm gonna bring a rock. I was gonna show him a rock.
If you look at like what's coming up with the earnings of all the retail ones, of Home Depot, Lowe's, Target, Kohl's, are all this upcoming week. So, like I was saying about earnings, right? If you guess right, you get a 6% return. If you guess wrong, you get a 6% loss. So, and that's a massive swing in one day.
Yeah.
So there's 4 companies. They're all tied to retail. Look at all the other retail companies doing better than expected results. So
Right.
roll the dice. If you had a crystal ball and knew, there's 4 companies that you could make a 5% return in 24 hours.
So the more.
That's not exciting.
That's freaking exciting. You should get excited about a 5% return in one day. A 5% return in one day is 1,000% gain in a year.
That's
Okay,
not
So the more I learn about markets, guys, and see the guys who are really making a lot of money from the markets,
Right.
they all have a specialized niche,
Right.
right? I was mentored by a guy who focused on trading volatility, and just volatility.
Right.
And there's Bao who focuses on shorting microcaps, right? And then there's like, private equity, Vista Equity Partners who focuses on flipping software companies.
Right.
For me, this stuff I'm sharing you, public market wise, it's another niche of mine, which is SaaS momentum,
Yeah.
right? Where it's SaaS growth, but it's not a dividend play. So remember going back a week ago when we talked about the different hedge fund portfolios out there, there are ETF guys who just focus on ETFs. There's highly diversified guys who just do 1% of everything.
Right.
There's the short seller bias guy, George Soros. There's a technology concentrated guy, technology momentum, Stanley Druckenmiller, right? There's the dividend focused person. There's the high conviction person. There's the global macro person. So every professional that I've come across that makes a lot of money in markets or wherever, they're getting it from some sort of niche. So if your niche is, it could be semiconductors. I'm looking at you, right? So it's just know your vertical or your niche really well, and you'd be okay. This is just my niche that I'm sharing with you guys. This is not the only way to invest, by the way, right? There's many ways to make money. The Vision Fund has been deploying entire country GDPs into businesses. All right, just a fun chart right here. Crazy. This chart right here. In 2018, venture invested. Oh, so this is the chart that I showed you guys earlier. Is it? Number of dollars. So total number of dollars in 2018 was 45 billion, right? And then yes, okay, that's right. So this is the consolidated number of dollars in deals into software business. It had a breakout year. You see how they're using the technicians phrase right here, breaking out of a 4-year plateau. 1, 2, 3, 4. It's a breakout, right? So deals are ramping up, but then on the other side, the growth, right? The deal count is slowing down. So what does that mean? Less deals, but higher value because of higher valuation market, right? Makes sense. Of the 45 billion in 2018, I showed you this earlier. United States was 38 billion. right? And of the 38 billion, the Bay Area was half of that. All right. Second runner-up, Tri-State, 4.7, 2.5, 2.4, and 8.2 in rest of the U.S. So what does that say? Going back to the beginning of today, there were 20 Salesforce towers that moved across Silicon Valley. Did anyone see it?
Now
But
we
you see the tallest building in SF, right?
Yeah.
But you didn't see the 20 that moved around. That's the part that's kind of crazy to me.
Just think, by the way, if you had $1 million and you invested it and got a 5% gain every day for the year, you'd be the wealthiest man in the world. Something to think about. You'd be worth $200 billion.
Well, like,
So 5% gain in a day. Don't underestimate the power of just getting that right and growing to.
yeah,
How often can you get that right?
yeah.
I
So
mean, 5% a day for a year, it sounds amazing, but
Yeah.
5% a day is just.
Absolutely.
yeah.
Well, you know.
So over the
Yeah,
last
it's a really big net.
over the last decade,
Oh, yeah.
over the last decade, the Bay Area has swung from representing 45 to 60% of the software ecosystem. This is it.
Yeah.
Right? Why are we not analyzing this this high-end cash flow? Yeah.
So is this all this in the private market or it's also private plus public?
This is the venture market only.
The venture market.
Yeah, not
Those
public.
are before public, coming to public.
Yeah, this is dollars invested into. Let me see. That's a good question. In U.S. Bay Area, up significantly. I would assume this is 20 billion is small for public, right? This is definitely venture because Apple's at $1 trillion.
Right. Yeah.
So we're not talking about the appreciation. That would be. I mean, I'm starting to see it. My gut tells me that. I mean, we can see here in real time the numbers: 20 billion in venture funded, right, or investments, whatever. But my gut, when I'm looking at all the stocks in the markets, my gut keeps telling me like wherever I look, I come back here.
Yeah.
So appreciation wise, a corporation, way bigger than 20 billion. It could even move 20 billion a day.
I guess ask of your whole portfolio, given what you've heard today, what percent of your portfolio should you have in software going forward?
I mean, if you're someone like Battery Ventures, it's 100%.
No, I mean as individual, like
Individuals,
most
right?
people in this room are individual equity holders.
Like I said, looking at the hedge fund portfolios from last week, it's personal preference,
Right.
right? It's your. Some people can't deal with the fluctuation,
Yeah.
Right.
right?
Well, you need
But
cash
but you
flow,
could better
or
manage
whatever.
that with knowledge.
Yeah.
Trust
Right.
me, trust me. You better manage it with
Absolutely.
that. Like when you just know it, like you've been reading it for like so long, you just know where Coupa is going.
Yeah.
You know, it's like I don't care if I'm down 20K,
Right.
right? You just like I know where this is going, and you just kind of sit back and let it work.
Absolutely.
Yeah.
Absolutely.
So it's all preference, and that's something that I've learned as I teach. Not everyone has the same style.
Yeah.
One more comment on like 20 billion, we don't see it going because there are so many startups out here. If you go to downtown Mountain View, I meet two friends who are there, they're already having their own startup there.
Yeah.
And they get around 10 million, 12 million. That's 20 billion is split up into so many different
So
ways.
what does that say? Be an entrepreneur,
Right? Yeah.
right? Like you want to meet the VCs, don't knock on their doors. Be an entrepreneur, then knock on their door. Right? Because they'll be like, okay, we'll consider you. This is the environment. Like the technology is prime, the money is, the location is prime. I don't know what more to ask. And I'm focusing on the real estate market. You know what I mean? It's like in the back of your mind, you know, like there's massive amount of money moving this way, but you're focusing on this market. So that's the hard part for me. I mean, that's something I struggle to just focus, right? But I'm getting there, and I'm working my way in there. That's why you see like the enterprise guy. Right? I even changed my name. Hey,
I gotta go.
hey, you're welcome. Thanks so much for coming. Appreciate it.
I'll come again.
No problem. Yeah. So guys, it is 2 hours. I'm probably gonna go 12:30. You guys are welcome to use the restroom, get some water. It's like a little 2-hour break, or you're welcome to leave as well. I don't
I got
force
you
people.
one too. This is a great meeting, by the way, as always.
Yeah, man. Yeah, this was the meeting for me. Yeah.
Full cloud.
So going back to the dollar value, right? We know that 20 billion, that 20 Salesforce towers moved around the Bay Area, but also transaction, 12,000 deals in Silicon Valley. All right, it occurred to me that when I was throwing these parties, these mixers once a month, now I'm going to do 2 a month, that every mixer, at least one VC would come in, small time VC, and that tells me something because I want to pay attention to what are the consumer stereotypes, right? What are consumers saying? Like, iPhone's the best. Look at the Apple stock. Engineers make a lot of money. Figure out where these engineers are working, right? So another one is from my analysis, why are VCs coming to my parties? Right? So it's very telling of something. And the last VC I met, it was with Darsh in the back, name's Henry, has an office in Palo Alto. Hopefully it's big enough to have a room like this maybe. You never know, right? Operating a $28 million fund. That's big for angel, for micro venture capital. So I see it. I see the opportunity there. Yeah, so this is Salesforce, right? Did you see 20 of these move around this year? Just something to think about. 20 of these moved around. It's gorgeous, right? It's like yeah, he's really got a trophy building right there. That's so cool. When I look at things like this, it not only does it deeply inspires me or sets my soul on fire, but it shows me the pinnacle of human effort, right? Where we all work together and just made this a reality. I just don't geek out to economic transactions, but I also geek out to economic accomplishments. So, yeah, I mean, whenever I go there, I'm always, whenever I go to SF, I try to squeeze in a trip to the Salesforce Tower. And just like try to look up like vertically, right? Because it hurts your neck when you're trying to see like the top of it. It's so high up. But it's owned by Boston Properties, $1 billion to make, and now the tenant is Salesforce. Interesting stuff. Key themes in 2018. So this is where we get a little bit more specific. Hey, Bernard, thanks so much, man. Appreciate it. I know it's draggy, guys. I try to keep it entertaining. I hope you guys are doing okay.
Oh, that's fantastic.
So
are you gonna publish these notes in your
yeah.
Cool.
The chat that you're not a part of.
I'll definitely.
One of these days,
some of
yeah.
those graphs are fantastic.
Yeah. No, for sure. I could send it to you directly. It's just a link.
Have a weekend.
Hey, see you, man. Key themes in 2018. So number one, AWS is a clear leader in public cloud. Number two, so AWS, Amazon, this guy's a serious player. Number two, open source goes mainstream. Open source like Red Hat. Number three, battle brewing for developer mindshare, right? Acquisition of GitHub, acquisition of LinkedIn. These are something to pay attention to. Number four, automation and artificial intelligence are here. Number five, Europe is far less penetrated than the US, despite similar demographics, right? Maybe the age of the crowd. Number six, the bottoms-up sales motion goes from niche to mainstream. Number seven, product is greater than sales spend for a new wave of software companies. Focus on the product. Number eight, product management becomes more data-driven. Number nine, culture matters, and remote work and distributed teams are here to stay. That's the new. I mean, I feel like, if our companies are not letting us work at home, we're not the latest and greatest, probably. Another way to think about it. Number 10, new acquirers emerge as more SaaS companies reach 1 billion and 5 billion plus in scale. So, state of the public market. So this is what the public market looks like in terms of cloud. AWS is a clear leader. Lots of feuding. So Amazon consumer business turned off its Oracle data warehouse. Oracle co-founder Larry Ellison slams AWS for security, cost, and performance. Red Hat and Microsoft co-developed the first Red Hat OpenShift jointly managed service on a public cloud, right? If Red Hat was still public, and I knew a big player like Microsoft was partnering with them, I mean, it's a bullish reason, right? Just like how Nutanix and HPE are partnering, and Nutanix is attractive to me. Educational opinion only. Microsoft, Adobe, and SAP form Open Data Initiative using Azure. State of the cloud, 51% AWS. Talk about monopoly, right? Not even oligopoly, almost oligopoly with Microsoft, 13%. Salesforce deepens global strategic alliance with AWS. Salesforce and AWS. Oracle Thomas Kurian is at odds with Larry Ellison on cloud, and this is named Google Cloud CEO after 22 years at Oracle. So did you guys see the new Google Cloud building? Level, what's it? They call it like stage 10 development or level 10 development. I mean, I watch that thing get developed every time I go past 237, and you see like stage 10 or level 10 development. It's really nice. Open source goes mainstream. So private unicorns, IPOs. So this is like the open source market, right? I didn't know MuleSoft was open source, but GitHub, Cloudera. I didn't know Cloudera in the well, I knew, right? But I thought they had. Well, no, that's how it works. You have a division where it's open source, but you also have a subscription. But Red Hat's the biggest in terms of M&A. Let's see, battle brewing for developer mindshare. So you see what I mean? If Microsoft is competing for that developer network, and I'm competing for a incubator accelerator community, right? The high value multiplier, human capital, whatever, would be developers, because what is my logic on that, right? If Zscaler is trading at 27x multiplier, and if I meet a Zscaler engineer, that to me is a 20. At least the market identified that asset as 27, 20 whatever x, right? So the employee, in my eyes, is a 27x engineer, at least in this valuation market. But that's not really true. That's not a fair statement. That's biased. That's quantitative bias or whatever. The reality is, these corporations are competing with each other for the employees, and they're treating us like sheep, man. They're passing us around. That's what I'm seeing with these advertisements. Anyways, developer workflow and collaboration, Microsoft Atlassian. So monitoring and logging, Splunk, AWS, ticketing, on-call operations. It really gives you insight into the reality of where we live, huh? Interesting. We're almost done, guys. Culture pays off. Highest rated cloud companies. So this is ranked in terms of culture. Number 1, HubSpot. I think this is acquired by Vista. Or no, that was Apptio. So HubSpot's publicly traded. Elastic's in Mountain View. DocuSign's here. Is it? San Mateo, maybe? Dropbox, Nutanix, Zscaler, MongoDB, and so forth. So culture is important to a software company, right? If you were a deep analyst, you might want to check the culture of the company. How are they treating the people? Because at the end, when you read Mark Benioff's Behind the Cloud book, right, Salesforce CEO, his book, when you read his book, he talks about, in the end, you know, he doesn't care about all the fast cars, the tall buildings anymore. The physical things don't impress him, right? And he's just focused on philanthropy now. But he said, once you get to that point, it's about, you know, the employees and also your customers. Real deep stuff. Because, you know, I guess an employee could become a customer. But that's how you know you have a great CEO, when, you know, the CEO is watching out for your back. That's just something that I've identified if you were to start an organization and grow as an organization. Anyways, remote work and distributed teams are here to stay. Flexibility of location, flexibility of daily schedule, increase employee loyalty. Nothing too much here, so I'll skip this slide. Let's see what else. The number of 1 billion plus and 5 billion plus SaaS companies continue to grow, presenting new potential acquirers in the market. So this is just showing the number of companies over 1 billion is 64, and the number of companies over 5 billion, 29. Next slide. So this is like towards the end, right? Serverless breaks out as the new compute platform. So this is where we were before, I guess, and this is where we're going to now. Growth of the serverless market. SK, can you explain this to me?
And instead of having a dedicated server,
Mhm.
most of the enterprises used to have like a client-server model. Like you have a client,
Yeah,
a laptop or mobile,
yeah,
and you have a server serving at the back end.
right.
So we have completely moved away from that market and having it like completely serverless.
Yeah.
You don't need like dedicated hardware. You are building like virtual machines on top of any commodity.
Yeah. So I could have 1 million followers on YouTube on my phone.
This is on the client side.
I mean, with today's technology, is that what you're saying? Okay.
So for a developer, you just write a code and deploy that.
You what?
For a developer, you just write a code and deploy.
So you write a code and give it to Amazon and they say you run it. I don't care where
Yep,
how
yep,
you run, what
yep,
you run.
yep.
Every time somebody uses that, I'll pay for it.
Yep. So interesting stuff. So this is what I'm saying. Like the more I talk here, I felt like the engineers that come in here, you have so much potential, but you're asking about like where can we find distressed real estate market stuff? You have a comment? Which is cool. I mean, it's okay. We'll figure out a Windows deal flow, but
I was at a Atlassian Summit this year. So
at Atlassian Summit. Cool.
They mentioned the same thing, that they're actually moving from server to cloud too.
Yeah.
And 20% of people actually increased to cloud now.
Yeah.
They're decreasing server now.
Yeah. Wow. Yeah. So I mean, it's growing. So we just gotta invest in the right direction. So almost done over here, guys.
The more serverless it becomes, the more internal struggle.
The more it might not be crazy to compete with cloud giants after all. So Amazon, Azure, and Cloud Platform, we know they have different services, right? So data warehousing. So we like Okta. Okta is part of security and access control. So this is where I'm saying there's a lot of niche software that's developing, and we need to pay attention to this if we want to, the opportunity to capitalize on it. I think this is what Bernard asked earlier, if I recall. But just basically saying these guys can't do it all. Laws of economics won't allow it. Specialization will win, right? So, guys like Snowflake, they're here, Qubole, Okta. I mean, if they win market share, it's over.
What is it actually telling us is on the previous slide, if I am my own company and I'm doing everything by my own, then I need to have so many vendors for me.
Mm-hmm.
Here, I'm just signing one contract with one vendor.
Yeah.
Amazon AWS, I'm getting everything done.
So now it comes down to like, if you're like a corporate CEO or a portfolio manager of the company, should we go pure cloud titan, or should we go diversified vendor? That's the trick question right there, right? Diversified vendor, one of them could go bust. Cloud titan, we give them all our power. I don't know. That's the decision of a corporate buyer that I talk to every day. Data governance and data sovereignty. I've been seeing this advertisement, like when I drive down San Mateo, 101 South, there's Kimesh.io or whatever, and it's just, all it says is data sovereignty. I get it. I mean, data's big. It's a data race right now more than an oil race. But, data governance, I get. Data sovereignty, that's a new concept, something to pay attention to. So I just thought that it was interesting that they brought this up. Microservices architecture. So this is what the architecture looked like before, and this is what it looks like today. Mainframe to now cloud native. Again, this is too techy to go deep into. Product now drives software sales. Right? This is what it looks like. Today is product driven, marketing driven, sales driven. Product driven now. So have a strong product. Any chicken or the egg debate of product versus distribution. Product-led companies are increasingly finding success. There are competitors in all segments of the software market, right? Enterprise, middle market, SMB, down to CRM, e-commerce, B2C marketing, etc. So I personally think you could probably make a good living being like a SMB software seller, right? Owning like your little agency or a little software company, and you're servicing small business. You just pray that Google doesn't go for them, right? With one of your niche services, there's a lot of opportunities for developers. Software innovation is now global, and this is what it looks like. Right? And we're almost done. But there has never been a better time to build a software company, right? And we're just getting started. Why do you think Battery Ventures said, put your logo here?
We are here.
We're here to invest in your equity. It's a funny world. And that's it, guys. I mean, I have a little bit more, but I want to respect everyone's time. So if you guys want to stay, feel free. But maybe a little break, chit-chat with you guys. I know you guys came last time, but I need to meet you. What was your name?
Victor.
Victor? Where are you coming from?
I'm working at Google.
Okay. Cool. Google people. Same thing?
No, I work at Talent.
Talon. Oh, I've heard that company.
We showed up sometime before.
Yeah. Well, hey, nice to meet you. I'm Kay. Welcome. I mean, it's nice to see younger people coming in here as well. New faces. Dave, how'd you like it so far? Was it okay? Yeah. Just like I acknowledge you guys. I haven't met you yet. What's your name?
Yes, Hisaki Fujita.
Oh, I think we met before once,
Yes,
maybe.
it was,
Mixer or here?
somewhere in the university.
Hey, thanks so much. The last part I have, if you're interested, is just some Real Vision VC recap. So I actually interviewed with a VC, and it's I'm just going to show you a few minutes of it. But he talks about the evolution of venture capital, as well as we'll get to it.
Maybe we can get it next time.
Oh, you want to do next time because you want to go? Yeah, we could. Yeah, let's save it till next time. If you guys are all like information overload. Hey, welcome guys. So I know your hat says Gap. At an angle, I thought it said SAP. So I don't think you work at SAP, right? Yeah, I think we'll call it here, guys. It's a long day. It's a lot of information. Let's save this for next week. Yeah. Thanks, guys. Yeah, I have a chat. Just 1 second. Thank you, Doris. Doris from online said thank you. Yeah, just text my phone number. I'll add you to the chat. We can hang out and chit chat if you guys like. Yeah, you can text me and I'll add you to our chat. I'll send it to everyone at once.
Through the meetup.
Yeah. You guys enjoy it? Thanks for coming. Yeah, we can chit chat.
You gotta have the second half. You guys have the second half.
PayPal's emerging. Square is emerging, more emerging. Square is more SMB, right? Point of sale solution. It's not bad. I'm more focused on the enterprise solution. So PayPal's okay. I like PayPal a lot. They've been acquiring good consumer brands like Venmo. We could do a venture capital analysis. Let me see. So I also leverage a bunch of tools like Crunchbase.
Yeah, so I use them. It's very hard to keep it.
Let's see. So
The first hit is not very.
So the reason why, I mean, I already know Square, right? Square's like a 2-time CEO, but I just want to see who else had skin in the game.
Yeah, he's the CEO of Twitter too.
Yeah, and Twitter. So I mean, I like it, but it doesn't have the huge upside like a MongoDB or a Coupa. So that's the only difference. And plus, it's more SMB consumer facing versus like enterprise facing. Sorry, I'm like lagging. So this is like another tool that I use. So Goldman Sachs is active in this one, Kozlov Ventures. So, you know, I like to leverage these names like Sequoia to know that they got skin in the game. What do I think about it? It's a pretty big market cap already. If I perform technical analysis for you on Square, so I just wanted to look at the private markets real quick on that. So on Square, it looks like it's in decline right now. For now, for the short to medium term, it's in decline. For the longer term, I'd say it's neutral. I don't see a reason to. Yeah, let me see. 90, 50, 60. Okay, what I'm looking at is probably $60 to hold. But I don't see a strong buy scenario right now. I did see one over here, right? There was a lot of interest here, but it just got faded. So now I'm concerned about that fade. Yeah, I guess it's better if I draw it out. So this is me looking at the weekly time frame. And what I see right here that I don't like is that big red candle, right? On very huge volume. It's telling me that there's scared hands. And usually when a big spike to the downside like that happens, you get like a knee-jerk reaction to the downside, right? And so this stock further declined. And now that decline is set up and then reversed, so 50 seems to be like a very important price area. So I don't think this stock could go below 50 unless we're in like maybe a major global recession. But I see that it was prior resistance and then acted as support right here and now acted as support once more. So judging from the most recent weakness, I think this will go down to 60 and will test 60, but it looks like there's a probability it could go to 50. But I don't think it'll go below 50. I think, yeah, that's what I see right now. So looking at the fundamentals, it's improving in terms of like earnings, and sales are really going parabolic. So my question is, you know, are SMBs going to widely adopt them as the go-to point of sale solution, and also other lending services? Because once they have that platform, they're going to sell other services like, hey, don't go to SBA lending anymore. Square will lend to you, and we'll lend based off of your sales, right? I read in their earnings and listened to their earnings. That's a cool strategy. So I like that from a platform perspective. My only concern, actually, there's not really a concern. They have to game the platform. There's other players, but I need to see market share charts right now. I don't know the market share. So I like it from that perspective. But immediate chart perspective, I think it's going to go down to 60 and maybe 50. And I want to watch it at 50. So maybe if you want to do a risk-reward positioning, I like 50 as a buy, consideration, educational opinion only, to see if it holds in terms of price. Yeah. So that's like a quick, like, I know the analysis is quick, but yeah, that's my take on it.
How about Tesla?
Oh, yeah. Tesla is looking really bearish right now. A lot of hedge fund managers are shorting Tesla. I'm not a participant in this. It's too noisy.
25% short.
Yeah, I think from the most recent price action, it looks like it's going to go down lower.
Ooh, 180.
The next support was 200, right?
The next support for this one is probably going to be definitely the $200, the $200 psychological.
If
Yeah.
you want to buy this way, do 200.
If you really want to try your game at this, 200.
Yeah.
Try it, but I'm not guaranteeing it will bounce. If it breaks 200, it could go down like a lot, like $20 plus.
But how are the demand and supply? That's the main
Supply and
concept,
demand.
right?
I mean, of the security or the car.
Car.
That I have to look at. I mean, you can see in the sales, right?
There are a lot of
But-
challenges that how they operate the business, right?
Yeah, I mean, if you analyze Tesla from like an industry perspective, right? They're competing against like world-class brands that are now
Exactly.
getting into electric vehicles. So Toyota, you know, you heard of the Sigma 6 black belt operational certification, whatever, right? So I mean, you got. I think those guys kind of invented it partially or whatever. Yeah, my take is like you already got this lean, long-term, you know, Toyota operating in that, and they jump into the market, provide a cheaper solution. That's where, you know, the question is. My take is I'm eyeing the autonomous vehicle software. I think there's bigger opportunity there than the hardware. But I mean, if you could win the hardware, hey, you could win people's attention and stuff too. There's other cross-sell, upsell opportunities. But that's my quick take on it, not a deep analysis. I mean, these are overcrowded securities. I don't like to focus on.
We have been watching this Shikar for a very long time.
Mm-hmm.
Yeah.
Yeah, I mean,
there's no point of gaining the price right now at this point.
I met one of the Tesla founders, original founders. He's here in the valley as well.
Oh.
Right? I mean, of course, right? They're here. But yeah, that's my quick take on it. Did you have a question too, Dave?
Oh, can you take a look at Micron?
Micron?
Yeah.
So yeah, we talked about my semiconductor overview earlier.
What do you see as short term?
Short term, it's looking like it wants to go down further. It could go. I mean, short term it could be a bounce at 35. Midterm looks like down lower, probably retest at 30. But I think the best way is to kind of track the semiconductor index, right? The semiconductor index is, again, this on top of what I showed you earlier about the global revenue right here. So semiconductor sales are declining.
It's like there's a cycle here, 10-year cycle. Every 10 years it drops.
Yeah, like a recession, right? so I like semiconductors, but I'm bearish right now because of inventory. Inventory meaning like cars, military jets, phones. Like Apple's slowing down, so semiconductor demand will slow down as well, right? So I'd be a little cautious for now, but you know, I mean, Nvidia. Okay, so I think Nvidia is a great proxy. It's a really great proxy to kind of leverage, right? I saw on earnings that it went up a lot to like 180, but the next day it just pointed back down. Yeah. So if you analyze Nvidia, right, and you go back like every 10 years, 20 years, every recession Nvidia goes down 80%, right? And we could backtest that. So I'll show you TradingView real quick right here. Every recession Nvidia. Well, maybe I can do my technical charts. Let's do this. NVDA. I got too many indicators on. It's too messy. Let me do this one for you. Just 1 second. So I've identified that every recession Nvidia goes down 80, 90%.
Almost.
So the next time you measure from the high to low and you see 80%, that's a buy. That's okay. Educational opinion only, all right? NVDA, and then we'll zoom out to the monthly.
300.
Hold on. Let me hide one of my indicators. Okay. Actually, let's keep it simple. I'll hide it all. Even hide my volume. Let's do weekly. Okay. So let's measure the drop. Okay. Just 1 second. It's loading. So every recession. Where's my ruler? Right here. So every recession this is 2001 recession, right? From high, oh darn, I can't see it. High to low. Well, I trust that you guys believe my measurement is accurate, okay? So 88% in 2001, right? And if we go over here and measure the top of 2008 right here, so that would be like 2007, and then go to the low, which is right here. What's that? 83%, right? And if you look at today, and you measure it from the high, it's not even 80% yet. It's only down 50, right? So historically, I'm gonna.
Around 60.
Huh?
80% would be around 60.
That's a good observation. Yeah. So if this goes to 60, I'm a buyer. I'll be a buyer there, aggressive buyer. But that's my take on semiconductors. I think semiconductors is a lot of overbuild, and because semiconductors bleed out into end user consumption, right? I mean, unless you, I don't know. I'm not an expert. I gotta ask the semi guys. But if they could explain how to measure the B2B semiconductor consumption, that'd be a nice chart to see, right? So I don't know that, but I know consumers slowing down. Or I know global is slowing down.
I suspect that the bullish trend from 2016 to 17 would be from the Bitcoin craze.
Yeah, it's all because of Bitcoin craze. suddenly the Bitcoin price
Now-
went
now
down and
Bitcoin
this guy.
is cooling off, I mean, since 2017.
Yeah, so I mean, I'm not too hot on, I mean, I see bigger opportunities, and that's where my attention.
Right now it's going because of
Yeah,
AI.
yeah,
AI
but
equals
you can't disregard hardware as an economic indicator. Hardware is a valuable economic indicator.
Because most of the people are saying because of AI it's growing now because AI requires all GPU thing.
It's growing, but maybe the market already priced it in,
Yeah.
right? That's typically the case for financial markets. Yeah. Yeah, I know it's your first time. What'd you think?
Oh, good, good.
Yeah?
I'll come back.
What? Hey, thanks so much.
Thank you.
Appreciate it. Yeah. If you guys have any questions, feel free. I think they got like a little mini group up there, so I'm
Just
gonna.
a very quick question
Sure.
about, just want to get more knowledge about the software industry, enterprise software. So what do you read?
Well, I'm
Is
a
that annual report and all this stuff?
well, I'm a practitioner,
Practitioner?
as in like I work in enterprise software.
Okay,
And that's
right
why,
now?
yeah, and that's why I can't. I have like very expensive tools I don't want to lose. Right, I have a $75,000 tool that I use every day to. It gives you executive information.
Oh, you're talking about those, okay,
Yeah,
I see,
and
okay.
how am I going to network with the B2B if I
Don't know.
don't have the tool? I'm not going to spend $75,000 for the tool, right?
So your company provides that, sounds like?
Yeah, yeah,
Oh,
but I
see.
leverage it for my own gain too.
I see, okay. So what is the tool name then? You might do.
Yeah, it's called
ask
Discover.
you-
It's called Discover.org. You've seen it before.
Oh, okay, okay.
Yeah, at the mixers when I'm talking to like the VCs,
Okay,
I pull it up and they want to like meet some people, right?
okay,
So it's just like ways to leverage things.
okay, okay.
Yeah. Oh.
Okay, okay, great, thank you.